24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Paul and Matt.
Nancy Lyons, thank you very much for that news. I misidentified you. It's Nancy Lyons, of course, down in Washington, D.C. Thank you very much for that. Looking at crude again, we've been calling that out, moving really higher again today, and this may be one reason why. Crude tanks at the largest U.S. storage hub and the pricing point for millions of dollars worth of oil contracts are running dry, threatening their ability to operate normally and sending prices for near-term supplies surging. Looking at this story here again, oil's been on the move. Stockpiles at Cushing, Oklahoma. The delivery point for benchmark U.S. crude futures tumbled to less than 22 million barrels last week, the lowest since July 2022. It's according to government data released Wednesday. Stockpiles have tumbled for 7 straight weeks and now sit just above seasonal lows last seen in 2014. At these levels, many traders consider inventories to already be at the lowest levels that allow tanks to function normally. The situation is forcing some traders to pay up big for last-minute supplies at Cushing. The prompt futures spread, which closely tracks supply and demand at the site, surged above $2 a barrel on Wednesday, the highest since July 2022. However, the U.S. refinery maintenance season is getting underway, likely preventing the storage hub from draining to absolute lows. Still, exports remain a wild card for balances, given that demand for American oil is high amid OPEC plus supply curbs, meaning domestic users will likely have to pay up to keep barrels in the U.S. So we've got some technical issues out there, it appears, at Cushing, Oklahoma, combined with the usual supply and demand drivers for WTI crude. So we'll keep an eye on that as crude continues to move higher. Right now, Sound On with Joe Matthews from Washington, D.C. That starts right now.
From our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Just 4 days to go. Welcome to the fastest show in politics as we move ever closer to a government shutdown, as the border now emerges as the latest wedge between Republicans and Democrats. We'll get the latest on all of this from Bloomberg Congress reporter Billy House, and we'll discuss the whole situation with Congressman Seth Moulton, the Democrat from Massachusetts, also a Marine combat veteran, will weigh in on Senator Tommy Tuberville's single blockade of military promotions over the Pentagon's abortion policy. You may have heard our interview last night. We'll have a lot more on it. Analysis from our signature panel today as we also head for the next Republican debate. That's tonight, and Donald Trump heads for Detroit meantime. We've got Bloomberg Politics contributors Rick Davis and Jeannie Shanzano back together again for the hour. So let's get started. As always, on Wall Street with a look at the markets. We go to New York. Say hi to Charlie Pelley.
Thank you very much, Joe Matthew. Lower across the board right now, have been higher, but mid-morning, stocks turned around and started declining. Right now, looking at a 14-point drop in the S&P 500 index. The S&P now at 4258. That index down by about 0.3%. Investors are contemplating the prospect of higher rates and that looming government shutdown. The Dow is down 166 points, a decline of 0.5%, and NASDAQ is down 36, a drop there of 0.4%. 10-year yield is at 4.59%, with a 2-year that's yielding 5.12%. Gold now down 1.3%, $18.75 the ounce. Crude oil, major story today. West Texas Intermediate, as we just heard from Paul Sweeney, up 3.8%, $93.86 a barrel on WTI. What about working from home? How is that playing into oil demand? Amrita Sen is the founder of Energy Aspects, and this morning on Surveillance, she told us the answer is not what you would expect.
Initially we all thought working from home will lead to lower oil demand. It seems to be going the other way because now people are having to come into work. There's more driving from further away because people have still moved out during the pandemic. We just aren't seeing the same impact from higher prices on demand. Again, early days, maybe people have excess savings. Let's see what happens next year, but I'm keeping an eye out on that.
And you can hear more of the conversation with Amrita Sen on the Surveillance podcast. You can download it wherever you get your podcasts. Oil stocks are trading higher today, along with the price of crude. ExxonMobil up 2.2%, BP up 1.8%, Chevron up 1.7%, EOG Resources up 2.4%, Pioneer Natural up 3.3%. Again, recapping stocks lower, S&P down 13, a drop there of just about 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, we do appreciate it. As always, we'll hear more from Charlie Pellet throughout the broadcast, as always, keeping you up to date on what's happening in the market. So welcome to the Wednesday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where the countdown clocks are ticking. Every cable network's got one. 4 days to a possible government shutdown. I could tell you that progress is being made. I could tell you that the Senate passed a CR, at least advanced a CR. I want to be clear on that, a procedural vote. 77-19 sounds pretty good. $6 billion each for Ukraine and disaster aid, no border security, and none of the spending cuts asked for by the House or demanded. And that's why it's considered DOA in the House. So we may as well turn to Speaker McCarthy for the state of play. Here's the Speaker a short time ago.
Just coming out of conference, I felt we had a really good conference. You watched last night, passing the rule to take up 4 more appropriation bills, and we get those done. Hopefully get those done by Thursday. That'd be 73% of all the discretionary spending. I talked to my conference today, I think. Get the next 5, we're going to need more time, so we will pass a continuing resolution, bring that rule up hopefully on Friday, that would keep government open, but at the same time deal with the border.
And then unicorns will fly out of the Capitol Dome. History will be made. This is getting confusing. Look, I could bring you up to date on more of the granular here, but the fact of the matter is it'll probably be all different tomorrow. So let's talk to the man first here in the center of the storm. Before we get to Congressman Seth Moulton, we bring in Billy House, Bloomberg congressional reporter who knows more about each wrinkle in this whole debate than just about anybody. If you ever see a picture, by the way, or a video of Speaker McCarthy walking down the hall with reporters around him, Billy House is always right on his arm, and that's why we have him with us now. Billy, it sure is looking like a shutdown is likely, if not inevitable at this point. The Speaker is talking like he's going to avoid a shutdown, but what's the real story?
Well, the real story is actually that procedurally, they don't look like they could get anything done by midnight Saturday, a tick after that, to avoid a shutdown. They aren't even working on the same CR bills at this point, and neither house has actually passed one, a CR being a short stopgap spending measure that would allow agencies to continue to be funded while they try to figure out their appropriations disagreements. So, yes, it looks like there's no way they can get it done by this weekend, and they really have no plan, a 2-chamber plan to ever, that seems on the path to ever getting together on a plan.
Man. So then, we're talking about duration, Billy. This thing shuts down over the weekend. I guess lawmakers stay in town until something is done. But, are we talking weeks here if we've made so little progress so far?
There's so many scenarios that individual lawmakers and groups of lawmakers are putting out there. Some are saying, hey, let's do 5 appropriations bills that the House could get done this week under a CR, and during that time period, work on the other 7 annual government spending bills and maybe do a CR for them. Or let's just have a shutdown to teach this modern Congress that they need to get back to the regular order in appropriations and get it done before, to moderates in the Republican Party who they don't know who to go with. They don't know whether to side with their party leaders or find some sort of respite over in the Democratic ranks.
Amazing. If you're with us watching on YouTube, by the way, you can see the glamorous digs that reporters like Billy have in the U.S. House of Representatives. That's the beautiful Longworth House office building. If you want to find us at YouTube, by the way, search Bloomberg Global News. Billy, just lastly, you've been around this speaker quite a bit. You've been around the Hill for longer. What's his disposition? He sounds very frustrated when he's talking to reporters. How's he doing on a personal level? I'm guessing he's under an enormous amount of stress right now. I'm actually asking you that seriously.
Well, and seriously, this is a guy who from day one, even before day one, has been under pressure from his right flank to do what they want to do, or they will move to oust him. So this is now even a new level of pressure on him. If he deals almost at any length with Democrats on to cave on any of these right-wing demands, they are saying they will go to the floor, led by Matt Gaetz, to remove him. He tries to project a kind of a rosy demeanor that he solved all the other problems, default problem with before, but this one seems like a new level of intensity, and you can tell his anxiousness at times is starting to wear.
Wow. Billy, it's always a pleasure to have you. Billy House, Bloomberg congressional reporter. Look for his byline on the terminal. He's ahead of everybody on all of this stuff. As we add the voice now of Congressman Seth Moulton, always a pleasure to have the congressman from Massachusetts with us. Of course, Congressman Moulton, a Democrat from Massachusetts who served 4 combat tours in Iraq, a Marine combat veteran who brings a unique perspective here from the Hill, and it's good to have you back. Congressman, I feel like maybe we've seen this movie before, although this one might be scarier than past episodes. What are you feeling? Are we shutting down in 4 days?
Yes, I think we are, and I say that just because that's what my Republican colleagues tell me. And as you know, as you've just explained, it's all up to them. I mean, when you have the majority in the House, as Republicans do, and you elect the speaker who determines what we vote on, what bills actually come to the floor, including whether or not they're going to vote on bills to actually get out of this shutdown, then it really is dependent on them. That's where we are right now. And I thought your analysis of what's going on with Speaker McCarthy is pretty accurate. You know, he could understand this. He could tell these extremists in his party, you know what, for the first time, I'm not going to listen to you. I'm not going to listen to you. I'm going to do the right thing for the country by bringing a compromise bill to the floor that both Republicans and Democrats can vote for to get us out of this mess. The same compromise bill that's already passed the Senate with both Democratic and Republican votes, and will do the right thing for the country. But he's not going to do the right thing for the country. He's going to do the right thing for himself to keep the gavel as speaker by putting us into a shutdown.
The speaker says now that the border is the issue. It's interesting how the storyline has evolved over this course of time. He says that he needs to meet with Joe Biden, and that if Joe Biden wants to keep the government open, he needs to shut down the border. How frequently are we going to hear the storyline change as we get closer to midnight on Saturday?
I've a wild guess, maybe twice a day with this character.
Is that how you feel, though? I mean, are you getting these signals from the Speaker's office?
Speaker McCarthy is completely out of control of his own conference, of his own Republican majority. And so what he's trying to do is come up with a different excuse, a different reason why this hasn't happened, to justify his continued effort to try to find some compromise that the extremists have already said they're not willing to accept. He's trying to drag it out by changing the story, by saying, well, now I need to meet with the president over this. Now I need to meet with, who knows, maybe he'll say he needs to meet with one of the secretaries over that. He's just trying to drag this out to save his position.
I've heard a couple of things over the past couple of days. You can tell me if they are true. Jim Clyburn, the congressman from South Carolina, told us yesterday here on Bloomberg that if Speaker McCarthy decided to work with Hakeem Jeffries, that your Democratic leader in the House would just have to say the word. You guys would back a continuing resolution that is moving its way through the Senate, or find votes to come up with your own in the House. We also heard from another lawmaker who was with us yesterday, who said Speaker McCarthy could pick up the phone right now and get this done if he simply engaged with Hakeem Jeffries. Is that true, that Democrats are actually standing by to help him solve this, even if this goes to a motion to vacate? Matt Gaetz is still threatening to fire the speaker. Democrats could also be there to help him get through that. Is this a matter of simply reaching across the aisle? Your party is ready to help?
Yes. Yes, it is. That's a simple answer. Yes. Now, let's pull it apart a little bit. In terms of actually funding the government, not only is what Jim Clyburn said true, but it's the way that these problems have always come to an end. When Republicans control the House, they've shut down the government before, and it's always been Democrats who bail them out, who join together with moderate Republicans, reasonable Republicans, to support a compromise bill, just like the one that has already passed the Senate this week, to get us out of this mess. So not only are Democrats standing here today, myself included, ready and willing to help, to work together, to do the right thing for the country, but that's what we've always done in the past when Republicans put us in this situation. It's only Republicans who threaten to shut down the government like this, and it's always Democrats who give the Republican majority the votes that they need to get out of it. Now, on the second question is more interesting because this would be largely unprecedented for a Republican speaker who got elected just with Republican votes to say the only way I can keep my job is to get Democrats to help support me, right? And if McCarthy wants to do that, Democrats are open to the conversation. But we're not just going to support him and his extremist agenda. We're not just going to say, go back to being speaker with the help of our votes and continue being subservient to these dangerous extremists in your party. What Speaker McCarthy would have to do is make a genuine deal with Democrats and say, no, I'm going to stop listening to the extremists. I'm actually going to govern from the center. I'm going to work to get things through the House in a bipartisan manner rather than continuing to make bills more and more extreme to satisfy these crazy members on the far right. Now, that would make Speaker McCarthy a truly historic speaker. He could fund the government. He could lead us through the rest of his term as speaker by doing a lot of good things, bipartisan things for the country. And Speaker McCarthy would even gain the one thing that he doesn't have, which is a good reputation. Sadly, I just don't know that he has the political courage or the wherewithal to actually do all of that.
Is that message being delivered? It must be to him.
It is. Absolutely. He understands this loud and clear. And there were even some people at the very beginning who knew Speaker McCarthy a lot longer than I have, even back in his days in the California legislature, and have said he's fundamentally, or at least historically, a more moderate, reasonable person. He's always been pretty transactional, you know, and not a transformative leader, not the most principled person on earth, but someone who's willing to work to get things done. But that's not the kind of speaker that he's been. He's been a speaker who's just trying to hold on to his job for dear life by doing whatever these extremists, these people like Matt Gaetz, ask of him.
We're spending time with Congressman Seth Moulton. The Democrat from Massachusetts, of course, has taken a strong stand against the blockade of military promotions that's still in place by Senator Tommy Tuberville, a Republican from Alabama, joined us yesterday here on Bloomberg to talk about it. Congressman, I don't want to waste your time with a lot of sound bites, but it's important you hear what he said because it's been echoing around the Capitol ever since. I specifically asked him about his decision to vote against the confirmation of the new chairman of the Joint Chiefs of Staff, C.Q. Brown. Of course, that vote went to the floor of the Senate because of his blockade. And that's an important appointment. If you're not familiar with General Brown, he's an African-American and obviously the most powerful position here in the United States military. And I asked Senator Tuberville why he voted against the now chairman of the Joint Chiefs, who he has suggested is quote-unquote woke. Here is what he said.
I think he'll do a good job, but I heard him say a few things that really didn't fit with me in terms of making our military better and better. You got to remember, we have a free country.
What was it, though, specifically, Senator?
Well, we have a free country, or we have things that we need to do to make sure that we can uphold, and we can't do that without a great, hard, strong military. Now, I heard some things that he talked about race and things that he wanted to mix into the military. Let me tell you something. Our military is not an equal opportunity employer. We're looking for the best of best.
I did press him a bit on that, Congressman, to put a finer point on what he means by race mixing into the military. I think he means diversity programs. You don't have to talk about Senator Tuberville, but I wondered if you could reflect on what you know about the chairman of the Joint Chiefs, General C.Q. Brown.
Chairman C.Q. Brown is one of the most impressive military officers of his generation. I personally wrote a letter to the President of the United States recommending him for this job because I've been so impressed by him. And by the way, I've been impressed by him in the midst of a lot of other incredibly impressive officers, like the former Commandant of the Marine Corps, David Berger, who has pioneered Force Design 2030, the modernization of the Marine Corps to meet the China threat that's led all the other services. Now, he actually worked very closely with General Brown of the Air Force and have advocated for these modernization efforts together. But these are some of the best military officers that I've ever seen. And I think C.Q. Brown is truly the best of the best. And I say that as a United States Marine veteran with 4 combat tours in Iraq. You just played audio from a senator from Alabama who was once a football coach, apparently knows a bit about football, but does not know anything about serving in the military. He's never served himself. He's never made any sorts of sacrifices like that in his life. He doesn't understand the troops. He certainly doesn't understand what they go through. And he obviously doesn't understand what it takes to make the best military fighting force on earth, which fundamentally is equal opportunity. Because if we are going to get the best of the best, then we have to have an organization that gives equal opportunity to all applicants. If you didn't have that, then you would immediately be saying, no, this segment of the population, they don't have the same opportunity to join the military. So if there are great women out there, or there are great Black Americans, or whatever group this senator doesn't like, well, need not apply. We're not going to benefit from your talent in the United States military, and that will make the military a weaker force. So to me, this senator is very soft on national security. He's very weak on patriotism. And, you know, maybe we're not supposed to say this, but he sounds like a racist to me. Hard to imagine this guy from Alabama being a racist, but that's certainly what it sounds like to this Marine.
I'm just going to leave that right there. Congressman Seth Moulton, we appreciate the time as always. Thanks for joining us today on what I know is a busy time on the Hill. And a conversation you won't hear or see anywhere else. Thanks for being with us here on Bloomberg Radio, on satellite radio, and on YouTube as we assemble our panel. Rick Davis and Jeannie Shanzano, I'm glad to say, are back together, Bloomberg Politics contributors. And I say we start right here. I also spoke, as I referenced earlier, with Congressman Jim Clyburn. Anne Marie and I both talked to him on balance of power immediately after our conversation with Senator Tuberville. We played that same remark for him. And here's what he said.
He is the worst of the worst. I have never said anything like that before, publicly anyway. Tuberville, to me, is just the worst of the worst. The people of Alabama ought to be embarrassed by that.
That's the gentleman from South Carolina, of course, formerly in the Democratic leadership in the House. Rick Davis, where do we start here? We've talked a lot about Tommy Tuberville, and he's clearly showing no signs of backing down. The chorus is getting louder, urging him to do so. But if Chuck Schumer keeps bringing confirmation votes like this to the floor, what motivates him to stop?
Well, look, I mean, there's no way to clean up the backlog because of Coach Tuberville. You have almost 350 officers in the U.S. military who have not been confirmed by the United States Senate. I mean, it's a ghastly number that's only going up every month when these promotions come due, and there's no ability for the Senate to act because of him. So let's be clear. The Senate is trying to confirm these on a case-by-case basis, but if they tried to confirm all of them this way, it'd be other 600 days it would take of legislative action with virtually nothing other happening. So that's not a trade anybody's willing to make. The senator from Alabama has a lot to learn, as we've heard from Seth Moulton, about the military. And if I were him, I would start to learn more than I talk, because every time he has a conversation on this topic, he gets himself into trouble. It wasn't long ago we were reeling from his comments about why white nationalists should be given priority in the military. If I were him, I would listen to the people of Alabama. He claims that that's what he puts as his top priority, because I don't think the people of Alabama have these attitudes.
Jeannie, I've seen a lot of comments on Twitter about this interview. You're going to see a lot more on cable news later, because everybody's been grabbing a piece of this. And the most common remark I've seen is about saying something out loud. Did he just say the truth out loud without realizing it here about race in the military?
I was so struck by this interview because what the senator said is that equal opportunity threatens our military. Our military is not an equal opportunity employer. I mean, just let that sink in for a moment. And maybe he should have a conversation with the Chief Justice of the Supreme Court, who, even when they overthrew affirmative action to many people's dismay last term, exempted our military institutions. All of this while the military struggles to recruit young men and young women. So this is where we stand, and he is holding up these nominees and saying that the Senate at this point facing a shutdown should take 700 hours, as your interview talked about, so that they can one by one hold these families and everyone else hostage while they debate each of these individual promotions. That is what the senator is talking about. And I think Representative Moulton was very clear in his language, and rightly so, about what this suggests about the senator's views. And it is a shame, not just for the people of Alabama, but for the people across the United States and our U.S. military. You guys talked about that op-ed in the Washington Post. Everyone should go back and read it. This is dismal.
3 military service branch secretaries calling on Senator Tuberville to drop his blockade. Rick, you know General C.Q. Brown. I wonder if you follow on Congressman Moulton's remarks, because this is a Trump-appointed Secretary of the Air Force, now Chairman of the Joint Chiefs of Staff with a decorated career, a fighter pilot, flew F-16s. What else should we know?
Yeah, as Chief of the Air Force, he distinguished himself. There's absolutely nothing that I could add to the distinguished Seth Moulton and his evaluation of C.Q. Brown's incredible career in the military. And we should all be proud of the fact that the military can take someone like C.Q. Brown, mold them into the leader that he is, and have the wherewithal to be able to supply the president with a number of people who all are high quality and incredibly experienced and incredibly committed to the safety of our nation and the world, as a choice for the chief of the Joint Chiefs. And to actually demean the job by saying, well, his only job is to advise the president, as if that's not an important job. Again, I mean, it's almost hard to even respond to some of the really foolish things that Coach Tuberville has to say. I mean, maybe if he feels more comfortable with football analogies, there are lots of jobs for coaches in the NFL. Maybe that's his next employment.
Boy. G.D. Shanzano, there's another lawmaker on Capitol Hill staging a single-man stage against something, I don't even know how to say it, a lone lawmaker's blockade. In this case, it's Matt Gaetz, the congressman from Florida, who's holding up the budget process. I actually asked Tommy Tuberville about him last night, says he supports what Matt Gaetz is doing. Gaetz took to the floor to talk about the most recent, I guess, lack of negotiation in the House and the idea that Speaker McCarthy and other Republicans might consider a continuing resolution. He's looking to fire the Speaker, as we know. Here's what he said.
The one thing I agree with my Democrat colleagues on is that for the last 8 months, this House has been poorly led, and we own that, and we have to do something about it. And you know what? My Democrat colleagues will have an opportunity to do something about that too, and we will see if they bail out our failed Speaker. I yield back.
We will see. We talked to Congressman Moulton about that, and we got an instant reaction, by the way, from Speaker McCarthy about what he's been hearing recently from the gentleman from Florida.
Have you seen Matt and what he said about me when we first started this? Look, People have got to get over personal differences. I'm focused on America. I think that's where America's looking right now as well. He never voted for me to start out with. I don't assume he's changing his position. He said a lot of things, and we waited through. The one thing I will always tell you is I'm never going to give up on America, and that's where my focus is going to be.
My goodness, Jeannie, just imagine where we're going to be by the time Friday night arrives, and it's clearly inevitable that the government will be shutting down. Matt Gaetz can't wait to drop that motion to vacate. Is it going to happen?
You know, I think it's not a question of if, it's a question of when. I mean, similar to the shutdown, it's not if anymore, it is when. And if Democrats table it, if they help the speaker survive, and we heard Representative Moulton tell you that that may be a good thing for Kevin McCarthy, but imagine this, he survives. Let's go beyond this shutdown. What happens then? How could he manage a Republican caucus if his survival is dependent on the Democrats? I think the House at that point would grind to a halt. So it is going to be a very, very interesting few months, let alone just the next week. And I disagree with my friend Rick Davis. Please, Rick, do not send Tommy Tuberville to the NFL. Jeepers, let's put him someplace else, but don't have him in the NFL.
I'm not sure that would have happened anyway, but I'll tell you what, Rick, I'd love to know where your head is, what you're hearing from your friends in appropriations on the Hill, because the Senate is advancing a continuing resolution. It does appear dead in the House, but I find it just amazing and ironic that as we now connect this to a border dispute, Speaker McCarthy says this is about border security. If the president wants to keep the government open, he's got to come to terms with this. But the Republican Homeland Security Appropriations Bill actually cuts funding for the agencies that secure the border. So if those Republican members who are blocking all of this got what they wanted, there'd be less money at the border. Can you help me make sense of it?
Yeah, sadly, I think it's got a lot more to do with polling than it does to do with policy. The reality is Kevin McCarthy started this entire shutdown sequence by saying the government's spending too much. And it is. I mean, there's no doubt about that. And he's been successful in negotiating deals with the president to rein in some of that spending. And of course, the president thought he had a deal, and none of this should be happening because we should be basically marking up all these appropriations bills to the number that they agreed to and passed in the United States House of Representatives. But then an ABC poll comes out and it shows that most Americans actually think that a shutdown is on the backs of the Democrats, not the Republicans, and that immigration is creeping up in the importance of the American public because you have a crisis at the border again. So what do? They pivot and say, hey, read the ABC poll. We need to be talking about immigration this week, not spending. And so the pivot occurs. The reality is none of this gets us any closer to a shutdown. And unfortunately, most of the people I know on Capitol Hill have told me that there's not enough impetus to actually force a confrontation with the Freedom Caucus and therefore maybe elicit a recall of the speaker and then get the Democrat support. So I'm afraid we are, like everybody else has commented, headed to a shutdown. And maybe then and only then do these kinds of pressures start to weigh on the leadership of the House.
Rick reminds us there was a deal, Jeannie. I hate to keep bringing this back up myself, but the whole point of the debt ceiling deal was so that we would avoid all this madness. And the view from the White House is just that. Joe Biden said, we made a deal. We shook hands. And they're not going to cut another deal with Speaker McCarthy. Does the Speaker have any credibility with this administration now?
No, it's very tough because that was a hard-fought deal. And we heard over the weekend the Secretary of Transportation saying we all gave up a lot in that deal. That wasn't a deal the White House wanted. It wasn't what Democrats wanted, but both sides gave. They shook hands. And Kevin McCarthy, because to Seth Moulton's point, he cannot control these 5'10" conservative members, has backed down from that in a desperate attempt to save his job. And where we are now is that he is trying to point fingers at everybody else, from the Senate to Senator Schumer to the president. The reality is he needs to point fingers where they lie in his own caucus, and he needs to stand up and he needs to be willing to say, I will walk away from his job, just like his Speaker Boehner and just like Speaker Ryan before him on the Republican side, because this caucus is at this point ungovernable, and we are all suffering as a result of it.
Yeah, it's amazing. We always talk about how we're in uncharted territory here, but the fact of the matter is there's a lot of history repeating itself, and that could continue for the speaker. Rick Davis and Jeannie Shanzano, glad we've got both today. Our signature panel on Sound On. It's debate night. We're going to turn to that next after we bring you up to date on the news. A check on world and national news now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The Senate is moving forward with that short-term government funding bill to avoid a shutdown by the end of the week.
This bipartisan CR is a temporary solution, a bridge towards cooperation and away from extremism.
But House Majority Leader Steve Scalise says any Senate proposal needs to reduce spending.
They're not paying for it today. They're not paying for it tomorrow. They want to track another $2 trillion in debt that's going to be sent to our grandchildren to pay for things that government wasn't doing just 2 years ago.
Government funding runs out at midnight Saturday. Federal government agencies are working on contingency plans in case that shutdown does become a reality. Among them, the Federal Aviation Administration, which is bracing for furloughs. We get more from Bloomberg's Amy Morris.
The White House says about 38% of the FAA's workforce would be furloughed. More than 13,000 air traffic controllers and 50,000 TSA officers would keep working, but without pay. Expect lapses in aviation security inspections, airport improvements, air traffic controller training, and more. The president of the Airline Pilots Association, Jason Ambrosi, says that failing to fully fund the FAA, quote, puts the world's safest aviation system at risk. In Washington, I'm Amy Morris, Bloomberg Radio.
7 GOP presidential candidates will be participating in tonight's second debate at the Reagan Presidential Library in California. Missing, though, from the lineup is the frontrunner, former President Donald Trump. He'll instead be in Detroit to meet with auto workers at a non-union parts supplier. At the last debate, few of the candidates took the opportunity to go after Trump. Tonight, they'll also likely be questioned about a possible government shutdown. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here on Bloomberg. Stocks are lower across the board, a topic we have been discussing right here on Sound On. A looming government shutdown. S&P right now down 31 points, a decline of 0.8%. We've got the Dow down 286 now, lower by 0.9%. The Nasdaq Composite Index down 88 points. That is a drop of 0.7%. Equities and treasuries are resuming their slide as investors contemplate the prospect as well of higher interest rates. 10-year yield right now 4.61% on the 10-year, with the 2-year at 5.13%. Spot gold down 1.5% to $18.72. We've got Bitcoin little changed, up $19 to $26,167, up by about 0.1%. Crude oil, West Texas Intermediate, major story today, up 3.4% on WTI at $93.49 a barrel. Brent, the global benchmark, at $96.40. That is a gain of 2.7%. A key gauge of American manufacturing improved during August. And with that story, here's Bloomberg's Vinny Del Giudice.
Factory orders for durable goods increased last month, supported by demand for business equipment, computers, electrical equipment, and machinery, paving the way. The data imply businesses are focused on long-term investment despite high interest rates and a very uncertain U.S. economic outlook. Vinny Del Giudice, Bloomberg Radio.
Also from Washington, word that the Federal Trade Commission is continuing its challenge of Microsoft's $69 billion acquisition of video game company Activision Blizzard in yet another attempt to fight the deal even after it closes. And finally, Wells Fargo is buying New York City's Neiman Marcus space for $550 million. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Could be a feast of issues tonight in the next Republican primary presidential debate. There's an auto workers strike going on, a looming government shutdown, debate over abortion rights in this country, the border, of course, but you know they're going to be talking about Donald Trump for most of it, right? He's not going to be there. He's in Detroit instead. We've discussed that. And if you ask the former president, as he made clear over the weekend, well, you shouldn't be watching that anyway.
They ought to stop wasting their time. You know, they're wasting a lot of time with these ridiculous debates that nobody's watching. Their last debate was the lowest rated debate in history. That's a good compliment, isn't it? And what was I...
I'm not sure that's even true, but that was right about the time that Fox cut out of his address. Let's reassemble the panel. Rick Davis and Jeannie Shanzano joined, Bloomberg Politics contributors. What are you expecting tonight, Rick? You read the tip sheets this morning. You read the analysis leading into this debate. The conventional wisdom is this doesn't even matter. And here they are at the Reagan Library, Simi Valley, Air Force One, all the staging, the pomp and circumstance. Does anything even come out of this?
Connection lost.
Yeah, I think that those kind of complaints are missing the point. If this crowd ever consolidates around one or two candidates, which I suspect it will at some point, the question is, is it pre-Iowa or post-Iowa? Donald Trump's going to have a real problem because in these states like Iowa and New Hampshire, he does not have a plurality vote. His numbers have been coming down in those states as the campaign is waged on. National politics doesn't like to look at that stuff. It's way too granular for them to figure out how many caucus goers are going to show up on caucus night and whether or not Trump is turning out enough people or whether he's got any popularity left in these places. He's still winning. There's no doubt about it. But these candidates are fighting for an opportunity to go head to head with him. And if he gets in that jam, his numbers don't support a one-on-one race. And if he's getting one, he's in trouble. And that's why these debates matter. It's early in the process. We're seeing these debaters, these candidates in real action, and that's what American public wants to see. And even if it's only Iowa and New Hampshire tune in, that's important.
This could be pretty rough and tumble, Jeannie. I don't know your expectation, but half of these candidates would light themselves on fire to make a dent and actually, get in the news tomorrow, increase their polling numbers, and they don't have to worry about Trump being on the stage. So who's in trouble tonight? Who are you watching?
You know, I'm really watching the three, but particularly two, DeSantis and also Nikki Haley. She had a standout performance in the first debate, so watching to see if she can repeat. DeSantis, can he try to solidify what was a second place to Donald Trump for a long time and seems to be slipping? And then as a third, Tim Scott, who's an awfully attractive candidate. So those are the three I'm watching. And this is a really important night because as the fourth quarter comes to a close, the question is going to be later in the year, who has raised the money? Who has the support to continue into next year? And let's not forget the CBS YouGov poll out yesterday, I believe, showed that 70% of Republicans in Iowa and New Hampshire are open to somebody besides Donald Trump. So if Republicans can consolidate around a quasi-second, so to speak, should something happen and there is a, either Donald Trump implodes for legal or other reasons, or there is a head-to-head with him and another candidate, it is going to be a race for Donald Trump because his numbers show that his floor is, you can beat his floor. And we see this particularly in New Hampshire where his floor is lowering. So what we once thought was, maybe the high 30s is now lowering. So he is beatable in some of these early states if they can consolidate. And that's why tonight matters.
A quasi-second. Man, we've lowered the bar here. Rick, I wonder your thoughts at this point on Donald Trump's counter-programming. There was a novelty to sitting down with Tucker Carlson. It was the first debate he was skipping. But for a lot of Americans, this could really just look like another Trump speech, another Trump rally. He's starting it an hour earlier than the debate begins. But will this have the same draw as he speaks to UAW members in Detroit?
Yeah, look, it's a lot harder to fudge on the numbers when you look at people who tune in on a cable broadcast. So with his interview with Tucker Carlson on X, impressions could be, an enormous number. I think he said, 250 million people watch it. Well, they did. They were 250 million impressions, which mean, a few people actually logged in and out a lot. And that's how you get to those numbers. So tomorrow or tonight is going to be a different problem for him. But he doesn't get in the way of facts. Like half of what he said in his statement you just aired is just simply not true. So I think people are starting to come around to the fact that listening to him is sort of an entertainment and it's not serious politics. And when they check out on him, then they start looking at these other candidates. You see exactly what Jeannie was just talking about. 70% of the Republican Party is looking for an option. They're either never Trumpers, 15% of the party are in that category, and they're looking to see what Chris Christie does tonight, because if he doesn't perform, they're going to start moving around looking for somebody. And then the almost Trumpers, the other 55%, who voted for Trump in the past but aren't really keen about doing it again, are going to be, really looking hard at Tim Scott and Nikki Haley and Ron DeSantis. Those are the people competing for that 55% of the vote. And it'll be interesting to see what they're able to come out with.
I like that. Jeannie, you consider, we've had a deep conversation about Republicans making a move on organized labor. Does the rank and file like Trump more than Biden? Are they arguing with their leadership about this? For most folks, though, it's just another Trump speech. Does it draw eyeballs?
I think it will draw attention, certainly media attention. Whether people tune in and, are glued to it is another question. But Donald Trump is obsessed with numbers. We know that from day one, and we know that from the judge's very, very shocking determination yesterday in New York that he had really overplayed his hand in terms of the size of many of his properties and the worth. So he will try to make the most out of whatever people tune in and whatever those numbers are. But the reality is that we know what we're going to get from Donald Trump. He's going to be at a non-union shop and he's going to be attacking Biden, the economy, and going hard on EVs and saying anything outrageous he can to get those eyeballs from Fox Business Tonight over to him.
That's the way you get the endorsement from the UAWs, to speak from a non-union shop. I don't know. We'll be watching. I just wonder if this split screen thing is real or if maybe it's a little bit of a flop. We're going to find out together tonight. And we'll hash it out tomorrow with Rick and Jeannie. I'm Joe Matthew in Washington. We've covered a lot of ground so far this hour, but we have not touched on the debate over chocolate milk in schools. They can't figure that out either. We'll have that next on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Just getting word that Epic Games is asking the Supreme Court to review a California court ruling that found Apple's App Store policies do not violate federal antitrust laws. Epic's request is the latest in a long-running battle between the maker of Fortnite and Apple over the way the iPhone maker runs its marketplace. Billions of dollars in revenue are at stake for Apple. Senate Banking Committee is backing legislation that would offer financial federal protections to banks that offer services to cannabis businesses, which is still against federal law despite being legal in many states. Hyundai Motor America and Kia America are recalling a combined 3.3 million cars. With more, here's Bloomberg's Tom Busby.
Charlie, the automakers say the vehicles are at risk of catching fire due to a brake fluid leak that could cause an electrical short. The companies say drivers of the vehicles should park them outside until their vehicles can be fixed. The U.S. National Highway Traffic Safety Administration said Hyundai, which recalled 1.64 million of the affected vehicles, is planning to replace the affected vehicle's anti-lock brake system module fuse. The agency said Kia, which recalled 1.73 million, still working on a remedy. Now, the agency said there have been 21 related fires with Hyundai vehicles in the U.S., as well as 22, quote, thermal incidents involving visible smoke, burning, and melting. Charlie?
And that's Tom Busby reporting ADRs of Hyundai. They're down now by 2.4%. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
We are live from Washington, where we'll add Kaylee Lyons to the conversation in just 5 minutes. And before we get back to our panel, let's bring you up to date on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hey, Nancy.
Thanks, Joe. New Jersey Senator Bob Menendez is maintaining his innocence and pleaded not guilty today at his arraignment on bribery charges. But pressure continues to build on Capitol Hill for him to step down.
The Senate's number 2 Democrat, Dick Durbin, is now calling on Menendez to resign. In a post on X, formerly Twitter, the Illinois senator said leaders in New Jersey have made clear Menendez can no longer serve. This is a shift for Durbin. Over the weekend, he told CNN's State of the Union Menendez should be presumed innocent and voters should decide his fate. Senate Democratic leader Chuck Schumer has said little beyond a statement last week that Menendez deserves due process in the courts. In Washington, I'm Nathan Hager, Bloomberg Radio.
Well, it is looking more likely there will be a government shutdown this weekend. The Senate is moving on a continuing resolution to continue negotiations, but Bloomberg's Anne-Marie Hordern says that Senate plan is not likely to sit well with House Republicans. She has more on the Senate proposal.
They are putting forward their own stopgap funding bill. I call it very vanilla in terms of what's in it. Keeps the government open just 6 days before Thanksgiving, so through November. And it does come with some Ukraine aid and some disaster relief aid. The issue is Speaker McCarthy can't put that on the floor because those hard right members of his party, like Matt Gaetz, already says that there'll be a motion to vacate, a.k.a. fire him.
Bloomberg's Anne-Marie Hordern in Washington. The House is planning to put forward several appropriations bills with amendments, then tackle a stopgap measure. But that whole process would not likely be completed before funding runs out at midnight Saturday. GOP presidential candidates face another debate tonight, and the 7 who will take the stage will likely need to address the looming shutdown, a renewed focus on abortion rights, and the ongoing strike impacting the auto industry. Former President Trump will not be participating, but will meet with auto workers instead in Detroit. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe.
Right, Nancy, thank you. As we consider the state of affairs here in Washington, imagine what we've been talking about this hour. A government shutdown, likely in just 4 days. It's always good to know our elected representatives are working on solutions on the issues that matter, like chocolate milk in schools. Enter Congressman Tom Tiffany, the Republican from Wisconsin. I guess read the Journal of the American Dietetic Association, as he referenced on the floor. Read that removing flavored milk from schools results in kids, well, drinking less milk. And this member of the Dairy Farmers Caucus delivered a message from the House floor, complete with a sign. Come and take it.
Milk is full of rich nutrients that support bone growth and development, and millions of children enjoy drinking it. We should not be funding rules that would limit our children's access to delicious and nutritious products like milk. I urge my colleagues to vote yes on this bipartisan amendment, and I reserve.
He even had his own version of the come and take it flag, which swapped out, looking at a picture of it here, swapped out the cannon for a carton of milk. Rick and Jeannie surely want to weigh in on this. Jeannie Shanzano, it's the cause of our time, I guess, chocolate milk in schools.
That's right, Joe. And Joe, do you know today is National Chocolate Milk Day? So how appropriate that you were talking about this drink invented in Jamaica. Although I have to say I disagree with the representative. It has a lot of sugar. It needs to get out of kids' schools. Yeah. I'm sorry. Okay. I'm sorry to disappoint, but, you know, it's got to go.
Spoken like an educator, as you are, Jeannie. He's introduced, by the way, Rick, the Milk is Indisputably Liked by Kids Act, or 2023, known to some simply as the Milk Act. Will it pass?
You know, I hope so. I know you don't need dairy, and I know that sugar is bad for you. But I want momentum. I want chocolate milk in the schools. That was a reason I went to school, was to get a chocolate milk. And so, I mean, why disappoint so many school-age children?
Always the best time with Rick Davis and Jeannie Shanzano, even in times like these. Hour 2 of Sound On starts right now. Oh, gosh. You missed our chocolate milk debate.
Now, from our nation's capital, this is Bloomberg Sound On.
We're talking about red and blue division within states. How busy is Donald Trump's legal team going to be? It's the economy, stupid. Is that actually what will decide this race?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
Federal spending combined with too lax monetary policy has produced this 40-year high in inflation.
China policy is driven basically by domestic politics.
American families are finding themselves further behind the 8 ball.
To get anything done in this Congress, it's going to have to be done in a bipartisan way.
Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
The government shutdown appears unavoidable at this point. So who should we pay? Welcome to Hour 2 of Sound On, as the Biden administration considers spending options now in the case of a full shutdown as soon as this weekend. It might be unavoidable, and we'll have the latest on negotiations from Capitol Hill, and we'll discuss the fallout with Michael Linden, former executive director of the Office of Management and Budget in the Biden White House, the man who would have had to make those decisions this weekend. SEC Chair Gary Gensler gets his latest grilling in the House. And a cannabis banking bill is moving in the Senate. Will it ever see the light of day? We'll talk about it with Nathan Dean, senior analyst at Bloomberg Intelligence. All that after a look at Wall Street. Let's get up to date on the markets now with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much. We are lower across the board. You mentioned some of those cannabis stocks in terms of movements, and we have got the marijuana ETF, the ETF MG Alternative Harvest ETF. It is trading lower now by 1.6%. Shares of Canopy Growth, they are down by 5.6%. And Tilray, that stock moving lower now by 1.6%. It is a down day for the Dow, the S&P, and NASDAQ. Equities and treasuries are resuming their slide as investors contemplate the prospect of higher rates and a looming government shutdown. The dollar extended its climb into a 6th day. Right now, the S&P 500 index is down 26, a drop there of 0.6%. Dow Industrials down 244, decline of 0.7, and NASDAQ lower by 74, a drop there of 0.6%. 10-year yield 4.62% with a 2-year 5.14%. Spot gold down $26 the ounce to $18.74, lower now by 1.4%. West Texas Intermediate crude up 3.6%, $93.65 a barrel on West Texas Intermediate crude. As for the overall market backdrop, Tony Dwyer is chief market strategist at Canaccord Genuity.
Our view is that you get three parts of this cycle. You get good news is bad news because it means a tighter Fed. That was 2022. Then you get bad news is good news because it means the Fed's done and rates can stabilize. But ultimately, the real time to buy, the time to be aggressive is when bad news becomes bad news. And I think we're starting to see the beginning of that with some of the consumer data.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Again, recapping, stocks lower with the S&P down 25, down now by about 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie Pellet in New York. Join us on YouTube. If you're not already enjoying this on the radio, I guess you'd need to be if you could hear me. Go to YouTube and search Bloomberg Global News. Our cameras are lit in studio as we say good day to Bloomberg's Kaylee Lines.
Good day, Joe.
Just back from Capitol Hill. That felt very formal, but good day to you, Kaylee. You've been rubbing elbows with lawmakers all day, none of whom seem to know what's going to happen next.
Although they all seem to think that more than likely the government will shut down come that deadline of midnight Saturday.
So are we beyond likely? Can we start saying that the government shuts down in 4 days?
Well, there were still a few I talked to, Congressman Brian Stile being one, who said something similar to what he told us on this show earlier this week, which is that it's always darkest before the dawn, and it ain't done yet, which is true. Not yet dawn. We still have a few days to go, but it's just looking really, really difficult at this point, Joe.
It is. It's interesting that Speaker McCarthy is talking about a way forward. It says that they will avoid a government shutdown. First, the spending bills, then they got a CR, but nobody can agree on the CR, even in the House, never mind the one that is moving in the Senate right now. By the way, he did react to that procedural vote in the Senate that sets up passage of a continuing resolution that would keep the government open. The Speaker doesn't want to do it the Senate's way.
They're picking Ukraine over Americans. Look, I know there's problems out there. What Russia has done is wrong. And we can defend that. But we also what is watching happen right here in America right now. Why can't we deal with the border and our emergencies too?
Getting back to the border, this is the new theme now, that if you want to keep the government open, Joe Biden, you got to deal with border security, even though this really hadn't been mentioned until 24 hours ago.
Yeah, and this is something that came up recurringly in my conversations with Republicans in the House on the Hill today. Brian Stile brought this up. Congressman French Hill of Arkansas brought up border as well. The idea that they can do a CR that has border security measures in it, and both of them suggested to me they might find support for that in the Senate, because when you have the likes of New York City Mayor Eric Adams talking about some of these issues with migrants, they said Democrats may want to deal with this too. It seems like they think the Senate wouldn't necessarily consider a measure like that dead on arrival. But as you say, Joe, the Senate's got its own thing in the works, and the House doesn't seem very into that.
We're talking about this like it matters with 4 days to go. I mean, at some point, we're going to have to come to terms with reality here. Look, I don't know exactly how this is going to end, but it's starting to be inevitable, I guess. That's why we wanted to talk to Michael Linden, because the next stage here is the administration making decisions on what checks to cut. Before we get that far, though, you've got some breaking news on the union in Detroit, and I just want to make sure that everybody hears about this, because we're going to be seeing a visit from former President Donald Trump tonight speaking to these workers. We have a new deadline.
Yeah, and this comes after Biden was with them on the picket line yesterday. Sean Fain, once again, the second week in a row on Friday at 10 a.m., is going to hold a Facebook live stream. And the UAW, we understand, does intend to expand strikes on Friday, barring major progress at the negotiating table. Not sure we've seen signs of major progress to this point, Joe. The idea is we could see another escalation for the second week in a row with an announcement over Facebook.
You know, it's been strangely quiet, even with the visits of Trump and Biden this week on negotiations. I wonder if Ford gets back on the list, if there's no further progress with Ford, if they're back in the doghouse. They were spared last time. They were spared last time, and we could have another scaling up, as they say, of the stand-ups this weekend. Again, boy, Friday. So we're going to have another deadline to look forward to.
Right. First, you expand the auto strike. Then you shut down the government. Then everyone starts paying back student loans again. It's a triple whammy.
Well, at least two of those we know are coming.
Yeah.
Michael Linden, the former senior advisor to the president, executive associate director of the Office of Management and Budget in the Biden administration, knows what it's like to have to make decisions when not all the money is available. Michael, it's great to have you on Bloomberg. Thanks for being with us. They must be modeling or making decisions already inside OMB in advance of a potential shutdown. What's the conversation like behind closed doors right now?
Yeah, that's right. And thanks for having me. Really appreciate being here. You're absolutely right. Whenever you approach a potential lapse in funding at the end of a fiscal year, at the end of a continuing resolution, OMB has to start going through the process of figuring out exactly what will actually shut down, what will continue at a reduced level, and what will continue sort of quasi-normally. But it's really important to understand that a shutdown is going to be painful no matter what decisions OMB makes, no matter how the administration chooses to interpret some of its authorities. The government does an enormous amount of behind the scenes, under the radar, day-to-day kinds of activities and protections and programs that American people rely on every day. Maybe they don't even realize they're relying on it, and they're going to realize when it's not there or when it's way slower than they expect. It's going to hurt a lot of people. But you're absolutely right that the process of figuring that out begins well in advance of a potential lapse.
So you say, Michael, that it is going to hurt a lot of people. And what I've heard continuously on Capitol Hill is that a shutdown is far less consequential than, say, a default on the debt, a failure of the U.S. government to meet its obligations, because the money comes back, right? As soon as the appropriation bills actually pass, everybody gets their back pay, no harm, no foul. But are you saying there is a foul here?
Well, there's definitely going to be harm and foul. I don't think it's the same as a default. That's true. But there's a lot of things between apocalypse and no harm at all. And this is somewhere in between. those things. So it's not no harm, no foul. Some people will get back pay. Federal employees will get back pay after the shutdown presumably ends. But in the meantime, if it goes on a long time and you're a federal employee or you're a service member and you're operating paycheck to paycheck and you don't get a paycheck one time, that's going to affect you. That's going to affect how you live your life. It may mean you miss a mortgage payment or you miss a rent payment, or you have to call your kid's childcare and say, I'm sorry, I can't make the payments this month. And that has ripple effects. I will also say that federal contractors are not guaranteed back pay. That's not something that will necessarily happen. And there's all sorts of other consequences that are beyond pay. So for example, the Small Business Administration is making loans every day to small businesses who need that assistance to make payroll or to expand or to make investments. They're not going to be able to process those loans during the shutdown. That small business owner is going to call up its local SBA office and going to get a busy signal or going to get a message that says, sorry, we can't answer the phone right now. That has broader implications for the economy as well. The truth is that the government shutdown will have consequences that are far-reaching and sometimes in ways that we won't be able to predict until they happen. And when they happen, people are going to be very unhappy.
Well, I'll tell you, this whole conversation has brought us a warning from Moody's this week. Michael, we talked to Mick Mulvaney here on the program a couple of days ago, and he found that to be inappropriate, suggesting that even in a shutdown, we continue to pay our debt. What is the conversation like around that inside the administration?
Well, the good news, there's good and bad news here, as is always the case. There are some requirements that the government will continue to pay under any circumstances, either because it's using a different form of funding. So when we're talking about a government shutdown here, we're talking about the annual appropriations process, which funds a lot of the basic systems and protections and services that the American people rely on, but it doesn't fund things like Social Security benefits or Medicare benefits or interest payments on the debt. So those things would continue. There are some consequences, however, that are really important to remember. The Social Security benefits are funded by separate funding streams that are not affected by a shutdown, but the people who process those Social Security benefits, the Social Security Administration, is funded by normal appropriations. And so those folks are going to go without a paycheck. Now, they will continue processing those payments, but will there be consequences for morale or for speed or for efficiency? Yes, there will be. And we shouldn't pretend that there won't be. Now, there won't be consequences on interest payments on our debt, but there will be these broad other consequences that it's very hard to predict exactly how they're going to turn out.
Well, and isn't a consequence as well, Michael, that all of this, implementing the shutdown, bringing the government out of a shutdown, costs money too? This is something Congressman Mike Lawler, who is a Republican, one of the most vocal Republicans against a shutdown, one who says he would sign on to a discharge petition along with Democrats in order to get the government funded if need be, says it's a myth that a shutdown saves money. It costs money. Can you just walk us through that?
He's absolutely right. It absolutely costs money. You end up having to incur costs that you wouldn't otherwise have to. You have to put off payments that might incur interest payments. There's all sorts of ways that the government ends up being much less efficient if it's operating on a skeleton crew or having to decide which things to do and put off till later. There's certain things that the government does that save money, things like investigating fraud and investigating waste that won't happen during a government shutdown. So he's absolutely right. It's going to cost money. It costs the economy. It costs individual families. And we should really be clear here that a shutdown is entirely avoidable here. Senate Republicans, Senate Democrats on board with a simple CR that would keep the government open. If that CR is on the floor of the House, it passes. The question is whether Speaker McCarthy will put that on the floor of the House or simply say, no, my caucus doesn't want to do that, and so we end up with a shutdown.
Michael, we still remember the deal that was struck. You mentioned the debt ceiling and the avoidance of default. There was a big deal, a grand deal that involved weeks of agonizing negotiations, and you were in the room for some of them. President Biden was asked just yesterday about Speaker McCarthy as a trusted player here. He said, "We made a deal. We shook hands." How come nobody remembers this orchestration around the debt ceiling limit? I wonder your thoughts on that, because that was the whole plan to prevent what we're going through now.
That's absolutely right, and I appreciate you bringing that up, because I was in the room. I was part of those negotiations, and I can tell you that part of that agreement was that we would avoid a government shutdown, but that we would be able to have an appropriations process that proceeds something close to normal. And the good news is that the Senate has actually been doing that, right? They have been passing appropriations bills out of committee on a bipartisan basis that align with that agreement. And the Speaker and the House Republicans did more than just shake hands. They voted for it. 150 Republicans in the House voted for that deal. It set top-line levels, and then they proceeded to pass appropriations bills that completely ignore that. And now they're going to shut down.
So Kevin McCarthy cannot be trusted then?
I think my own view, and I was in the room, is that they were absolutely negotiating in good faith. I really do believe that. I think they intended to stick to that deal, and whether the tail is now just wagging the dog in the House caucus and the Speaker can't get control of his most extreme elements or is unwilling to confront them, that may have changed. But I think that the Speaker was negotiating in good faith. I think the Speaker still has a chance to make good on that. We don't need a shutdown here. They can give themselves more time, and they should do that. He should take that chance.
Michael, I caught up with Congressman French Hill earlier today, and he was talking about how the fact that we had a deal, we agreed to it. His direct quote was, "And now we're relitigating it with here with some in the Republican Party." The operative word there being some. Realistically, we're talking about just a few members that are holding this up. Another Republican I spoke with, Brian Stiles, said that this just shows that the spending process in the U.S. is broken. How should it be fixed if this happens time and again?
Well, it's an interesting point, and I couldn't agree more that what we have here is a problem with one faction in one party in one chamber, and the Speaker is allowing that one faction to control whether or not we get to shut down, or whether we have a shutdown or not, or get to keep the government open. And it's interesting that this year, we did agree to a top-line agreement well in advance of the deadline. The Senate has been proceeding according to the sort of normal appropriations process, passing individual bills out of committee on a bipartisan basis. The House has decided to go a different direction. I don't know that there's any process or deals that can fix something that's rotten inside one caucus. If the Speaker is not willing to confront that caucus and say, "I'm just not going to listen to you," there's a broad bipartisan majority for appropriations bills that meet the terms of the deal that we all agreed to. He could still do that. There is a majority in the House to keep the government open and to pass appropriations bills.
There's still a chance, says Michael Linden, but it's not looking good. Many thanks, Michael, for your insights. We appreciate you bringing your firsthand experience to us here on Sound On. With Kaylee Lines, I'm Joe Matthew. This is Bloomberg.
Profits. Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower, and this update is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Stocks and bonds have resumed their slide as investors contemplate the prospect of higher interest rates and a looming government shutdown. The S&P 500 index and the NASDAQ 100 index are both slumping as the price of oil continues to rise. West Texas Intermediate crude now at $94 a barrel. Right now up by 4%, just hitting 94. 10-year yield 4.63% with a 2-year that's yielding 5.15%. Stocks are lower with the S&P down 25, have been higher in the early going, but now down by 0.6%. Dow Industrial is down 246, lower by 0.7, and the NASDAQ Composite Index is down 69 points, a drop there of 0.5%. Spot gold down $27 the ounce to $18.73 for gold. That is a drop now of 1.4%. The United Auto Workers Union plans to expand its strike on Detroit's legacy automakers on Friday if there is not major progress in negotiations. Automaker shares are lower. Ford right now down by 1%. General Motors down 0.6%. Stellantis lower by 0.8%. And Target says it is closing 9 stores in 4 states to stem losses from rising retail theft. Target shares down 0.2%. Kohl's down 0.6%. Macy's up by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Whenever the chair of the SEC goes to the U.S. House of Representatives, it's usually worth popping some corn. The drama that follows is typically inevitable, and that's partly why Kaylee Lines was up on Capitol Hill today. You follow him wherever he goes, right?
I try.
Gary Gensler, he goes to a sporting event. Kaylee's right there with a microphone today. A House hearing. With what purpose did the lawmakers summon the chair of the SEC?
This is an oversight hearing.
So we can talk about anything we want.
A chance to air grievances,
Right.
if you will, at least if you're in the majority party, because they tend to not like what Gary Gensler has been doing at the SEC. On the other side of the aisle, though, Democrats are broadly supportive of him as chair. They say he's a strict cop on the beat, and maybe that's why Republicans don't like him so much.
You talk to a lot of lawmakers coming and going from the hearing. And as well, we're going to talk about the Senate Banking Committee markup of the Safer Banking Act. And that's why we have Nathan Dean with us, senior policy analyst at Bloomberg Intelligence. We are his clients here on Sound On. Nice to see you, sir. As always, a specialist on both of these topics. Where do we begin with Gensler?
Are you asking me or are you
I
asking
sure
me?
am asking you. You were there.
Well, I asked this of a few lawmakers, Nathan. They have these hearings often. They always express displeasure with what he is doing, and yet he continues with the rulemaking. He continues with enforcement actions. It doesn't seem like behaviorally inside the agency anything really changes. So what's the point?
So it's sort of like when you said airing the grievances, I was thinking of Festivus.
Yeah.
You know, it's almost like Festivus. And look, they would
There's
certainly...
so many Seinfeld references this
For
week.
the rest of us, there have been kind of on every show.
But, I mean, this is an oversight hearing that always happens, twice a year. And what you're trying to do in this case, if you're the Republicans, or even the Democrats for that matter, is to try and influence some of the rulemaking process. Now, Chairman Gensler is an expert at saying, look, this is up to the staff recommendation. This is up to, the 5 commissioners and so forth like that. But you're trying to ensure that, for example, in the climate change disclosure rule, that scope 3, the emissions data gets included. Put public pressure on him to do this. Now, look, a lot of this is just popcorn, like you mentioned. Tomorrow, we'll wake up and I don't think the world will have changed all that much. But, it's certainly a game that they have to play every few months when he goes to the Hill and testifies.
Well, I asked this of Congressman Brian Stile. I said, what can you really do here? And his answer was what we're talking about at large on Capitol Hill right now. It was about funding.
Follow the money.
We can get very nuanced as to how the SEC is funded, in particular as it relates to the ability to roll out specific rules. It's easier said than done, but that's probably our best tool in the toolkit to do that.
What do you think about that?
Look, they've always tried to, play with regulatory funding as a way to get the SEC or the CFTC or, for that matter, any agency to do their bidding. The SEC has to go every year to appropriations and say, please give me this.
Yeah.
And, Congress, they'll try and defund it, but. And this pains me because I love financial regulation, but financial regulation never gets to the point where it's worthy of risking a government shutdown or trying to have intense negotiations over this. So, I think somebody will try. But ultimately, when the lawmakers get into their huddles and trying to keep the government funding open and so forth like that, SEC funding really won't be a part of the conversation.
I have to ask you about safer banking, a little bit different than safe banking. And you're writing that this Senate committee approval raises chance of an actual law being passed, but not until next year is the point that you have made here. Safer banking, I read at Bloomberg Intelligence, not an elixir for ailing cannabis firms. The stocks have been popping on hopes here, though, haven't they?
Yeah, so this is the SAFER, previously it was the Safe Banking Act. The only difference is language over law enforcement powers. And that's where the holdup was today in the markup. There was actually, I think there were two key points in the markup. One was there's not consensus on this law enforcement Section 10 language. Senator Lummis actually made a statement prior to the markup saying, look, let's just get through the markup and then we'll hammer that language out when we do the floor vote negotiations. So there's still a lot more work that needs to be done there. The second thing is Senator Warnock raised an issue about criminal justice reform. He voted no against this bill because it didn't go far enough. Now, Senator Schumer has said that he wants to attach this to the HOPE Act, but that raises questions of you may lose Republican support on that. So these are a lot of issues that I just don't think can get hashed out in the next 8 legislative weeks. And so it wouldn't surprise me if this gets punted to 2024, and then you got to go through the House.
Exactly.
And, I just don't think there's any indication at this point that the House is willing to take this up. Now, it's passed it in the past, but that was under Nancy Pelosi.
Right.
And so I'm just not sure. I do think this will eventually get there, but I think it's actually going to be towards the end of 2024 when Congress is doing some cleanup bills. Maybe it's attached to a government funding issue to just get it through. But look, I think we'll be talking about safer banking for quite some time now.
I asked a Republican Congressman, Scott Fitzgerald, about whether or not this kind of legislation is something he could find himself supporting. And what he told me is, I don't think there's any intent to have that come out of the House side. I then asked Democratic Congressman Jim Himes from Connecticut what he thought, and he kind of suggested it might happen. This is what he said.
And I've heard the chairman over and over again say some version of, I don't really like it, but I probably won't stand in the way. And I don't speak for the chairman, obviously, but, we've been working on this for years. And, you don't need to agree with the legalization of cannabis to say that, dispensaries in states where it is legal shouldn't have $60,000 in cash at the end of the day. I think this could be a real win-win.
Reminding us there, Joe, that this is really just about giving these companies access to the banking system so they don't have to do everything.
At least it was
cash.
until it became safer.
Right. And now the concern is, how does this apply to, say, gun and energy companies when they're dealing with the banking system, which is a lot of the issue Republicans have. Do you think that is an issue really that Chair McHenry has?
Yeah, absolutely. I mean, and to Representative Himes' point, when he said, look, the chairman may not oppose this, he's not going to stand in the way of it, that's a problem. He needs the chairman to actually say, look, we need to get this done because they control the chamber. And so, it's easy for some of these Republicans to say, we're not going to stand in the way, but for those advocates that want this bill done, that's a problem. Now, when it comes to the guns and, it's funny, a lot of the discussion today was not about cannabis in the markup. It was about how these law enforcement agencies could use these powers for non-cannabis issues. That issue is going to go to the House, and it's going to be even more disruptive to try and get to a consensus. And so this really just comes down to Republican leadership in the House saying, look, can we get to this point? Can we pass this bill? And can we pass this bill with probably more Democratic votes than Republican votes? That's the old Boehner rule that, that Republican speakers don't like invoking. So I'm just not exactly sure over the next 6 months. But I keep coming back to the fact that, there is this, we'll call it regulatory gap. And I think that they may be able to find a politically acceptable way to get this through towards the end of next year.
The original version of the bill, though, passed the House over a dozen times. Wouldn't that have had a different outcome if they had stuck with the language that we've been looking at in the Safe Banking Act for years?
So that was under the Nancy Pelosi when the Democrats controlled the House.
Yeah.
And one of the reasons why the bill didn't pass then is because Senator Schumer and Senator Booker and the Senate Democrats tried to swing for the fences and get not just the Safe Banking Act, but also criminal justice reform and this.
So it's the equity component, criminal justice, that's going to be.
It's Section 10. It's the old Section 10 language about law enforcement powers, because Operation Choke Point comes into play here. And then once you mention Operation Choke Point, that opens up a whole other part of issues here. So the problem is that I think if you were to give Congress truth serum, and they would have to vote specifically just for the Safe Banking Act, of this idea of allowing banks to take into money, it would pass, pretty comprehensively. But its problem is that when you get into the politics into play, you start adding, this law enforcement Section 10 powers and so forth. How does it fit with decriminalization and criminal justice reform? It always runs into these roadblocks, and the marijuana equities always move up. And then when they hit these roadblocks, they always move down.
Looking at the MJ has turned negative today. MSOS, which is actually more along the lines of what you're looking at, right? Because it's U.S. operators.
Correct.
Specifically trading lower today. They clearly know what you know.
Yep.
That's where we are.
They're reading his research.
Yeah,
obviously.
They should be. I'll tell you what. Be a client like we are. It's the best thing we have going here. Nathan Dean, Bloomberg Intelligence. Great to see you, and thank you as always. When we talk Gensler, when we talk safe banking, Kaylee, we have to bring in Nathan Dean.
Always.
All right, good. Let's get up to date on everything else happening in the world here. World and national news now with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The second Republican presidential debate is set for tonight at the Ronald Reagan Presidential Library in Simi Valley, California. 7 Republicans have qualified for this one, but the GOP frontrunner, Donald Trump, will not be there. Instead, he'll be in Michigan working to win over blue-collar workers in the midst of the auto workers' strike. He'll be speaking, though, at a non-union auto parts supplier. His trip comes a day after President Biden became the first sitting president to walk a picket line. The U.S. soldier who crossed the DMZ into North Korea 2 months ago is back in U.S. custody. Bloomberg's John Herskovitz is in Tokyo and explains what happened back in July, just before Private Travis King rushed across the border.
He had been held in South Korea for some charges, including assault. He was released from custody in South Korea and was going to go back to the U.S. to face expulsion from the U.S. military. Instead of going on a plane back to Texas, where his base was, he went on a tour to the border between North and South Korea in the Panmunjom Truce Village.
Bloomberg's Herskovitz says that that's when King ran into North Korea. His fate now remains uncertain since he was declared AWOL by the U.S. U.S. astronaut Frank Rubio has successfully landed in Kazakhstan after breaking the record for the longest continuous space flight by an American. He spent 371 days in space. This is NASA's Rob Navius.
Touchdown confirmed at 6:17 a.m. Central Time. Rubio's record ride comes to an end.
Rubio's stay was extended on the space station by 6 months due to a leak. Global news 24 hours a day, powered by more than 2,700 journalists.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg, and a turnaround for stocks since our last update. The S&P is now positive, barely, but up half a point right now. We've got the Dow Jones Industrial Average lower by 63 points, a decline now of 0.2%, while the Nasdaq Composite Index is up by 20. That is a gain of 0.2%. 10-year yield 4.62% right now on the 10-year. We've got the 2-year yielding 5.14%. Spot gold down $23 the ounce to $18.77, a drop there of 1.2%. And West Texas Intermediate crude is up 3.9%, $93.93 for a barrel of WTI. Equities and treasuries resume their slide as investors contemplate the prospect of higher rates and a looming government shutdown. American mortgage rates are now at the highest in 23 years. And with more on that story, here's Bloomberg's Vinny Del Giudice.
The rate on a 30-year fixed mortgage rose to 7.41% based on weekly data from the Mortgage Bankers Association. That's the steepest since the year 2000, and it's sending loan applications to some of the lowest levels in decades. Why now? Federal Reserve officials have signaled they may keep lifting their benchmark interest rate to squelch inflation. Vinny Del Giudice, Bloomberg Radio.
Epic Games is asking the U.S. Supreme Court to review a California court ruling that found Apple's App Store policies do not violate federal antitrust laws. Again, recapping, stocks are trading mixed now with the Dow lower by 0.2%. Choppy session. The Dow Jones Industrial Average lower. The S&P virtually unchanged on the day, up by 1 point now. Nasdaq up by 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Pretty remarkable headline yesterday, Kaylee, as the FTC finally does it. A lot of folks saw it coming. It was expected, suing Amazon, the company that was making our lives easier. The government thinks is anti-competitive. And Lena Khan, the chair of the FTC, who paid us a visit here in the Bloomberg Bureau yesterday, says they want to break them up.
She didn't say that in so many words.
Yeah?
She was a little reluctant to get into the idea of remedies. What she did say, though, is that competition needs to be restored.
How do you do that without breaking them up?
Well, and if you look through the complaint, they talk about a series of tactics that Amazon has, essentially, to stifle competition, things like that. And I asked her, I had the opportunity at one point to say, if it's a tactics issue, is this something that Amazon can just fix internally and stay whole? And what she said was just altering the tactics may not be sufficient to fully restore competition, which maybe is hinting at the idea that maybe it should be broken up.
As opposed to...
Not trying to put words in her mouth here.
Well, let's listen to it.
Yeah.
She said, here's Lena Khan at Bloomberg.
These are a set of tactics, but ultimately Amazon has pursued them to deprive actual and potential competitors of the ability to gain the scale and momentum needed to effectively compete online. And having achieved and protected its monopoly power, our complaint details how Amazon is now exploiting that monopoly power in ways that harm customers.
And you know, when there's an antitrust case, there's one person we turn to for help, and that's Jennifer Rhee. Imagine the day she had yesterday. Senior litigation analyst at Bloomberg Intelligence. She joins us from New York at World Headquarters. Jen, Kaylee is keeping me out of trouble here. I know they didn't say they wanted to break up Amazon, but what else would happen?
Well, you know, she is keeping you out of trouble because they didn't say that, but they do say right in their complaint that they're looking for a permanent injunction, and and they say right there that structural relief is a possibility. So they have 100% left the door open to ask for some sort of structural relief or a breakup, and I suspect that if they do well on liability, that's the direction they'll go in.
Well, Jennifer, it's a question of if they will do well, though, right? When we're talking about Lena Khan going after big tech companies, at least of late, in regard to acquisitions they attempt to make, she's been dealt a couple blows in court. Look at Microsoft Activision or the Meta deal, but those were deals. That's not just the existence of a company being called into question. So walk us through how that might be different.
So the theories in those cases were really very difficult theories to win, generally. And so I think going in, there was an expectation that it was going to be a real uphill climb for the FTC, and it was unlikely to win those merger challenges. You know, in this case, at least one of the claims, they're kind of two main claims, even though the complaint is 170 pages. They're really saying there are two things that Amazon does that are anti-competitive. And if you look at the both of them, I think one of them is fairly weak, but one of them can absolutely violate antitrust laws. And this is what they're calling this anti-discounting policy, that Amazon punishes sellers that sell the product for a lower price outside of Amazon's marketplace. And this has a price-raising effect, because instead of just lowering the price everywhere, that seller matches the higher Amazon price outside of Amazon. That's pretty traditional. You know, it's not a weird theory. It's not novel. It's not asking a court to expand antitrust law. I will still say it's difficult to win, though. You know, if you look at an antitrust textbook, they will tell you that this is kind of like a most favored nations clause. That's how it operates. And they will tell you this can violate antitrust laws. Yes, if a monopolist engages in this activity and it does cause prices to rise and causes harm to a market, it can. But I will tell you that so far no court has actually ruled that an MFN clause is illegal. So it's a claim that has some traction, I think. There are ongoing lawsuits that have brought the same claim that have, at least at this point, survived motions to dismiss. So
so we've got another tough case to make here.
Right.
And Bloomberg says this case represents a career-defining moment for Lina Khan. So what happens if she loses?
Well, first of all, I think there's a possibility she may not even be in her position at the point in time that the case loses. Now, I'm not saying that the case is going to lose. I could very well see some decision on liability that's followed by a remedy that is not structural. And I think that would be not particularly impactful on the company, but I could see that as a result here. But I would think that result is 3 or 4 years down the road. And we don't know whether she'll still be there, even if the next administration is still a Democratic administration.
Well, Jen, one of the reasons why we say this is career defining is because Lina Khan has had her eyes on Amazon for years. I mean, when she was an academic, before she was chairing the FTC, this is what she was doing research papers on.
Yes.
And this is not the first case she's brought against Amazon either. This is the fourth.
That's right.
So why would the fourth case be different than the 3 prior? Walk us through the differences here, if you would.
Well, the 3 prior were consumer protection cases. And the article that Lina Khan wrote about Amazon was really focused on antitrust and not consumer protection violations. It was about anti-competitive tactics of a monopolist. And I think it's been called career defining because many believe she was put in the position that she's in as chair of the Federal Trade Commission simply to pursue something like this against Amazon because it was completely clear that she believed that this company is a monopolist that engages in anti-competitive conduct. So in that respect, it's career defining. But in another way, I actually don't see it as career defining, and that is that another position that Lina Khan holds is that we need to change the antitrust laws in the way they've been interpreted for years. The antitrust laws have been narrowed so much by interpretations that they've become ineffective, and we need to kind of go back to earlier interpretations from the 1960s. And I'm not so sure that this is a case that does that will expand the law. It's not asking a judge to be a judicial activist and to push the bounds of the way these laws have been interpreted in the past. But yes, I understand why people view it as career defining because she has been Amazon's antitrust foe since at least 2017.
Kaylee mentions some of the other cases. 2 separate cases, one for failing to delete data about kids collected by Alexa, which I love saying on the radio because people are, hey, Alexa, just have fun with that. And then illegal spying on users of its Ring doorbells and cameras. But they settled this, right, Jen? So we're never going to know if Alexa's spying?
That's right. And those are all consumer protection. They're kind of smaller matters, really not what she wants. You know, she wants to call Amazon a monopolist. She wants it to be deemed a monopolist in court, and I think probably would love to see some sort of a structural solution and a breakup of the company.
Yeah. Well, later we'll say, hey, Alexa, what's going to happen in the lawsuit against Amazon? Jen Reed, great conversation as always. She's the smartest at this. Bloomberg Intelligence Senior Litigation Analyst with us on Sound On. We always get something when we talk to Jen.
Absolutely.
Thank you.
Fascinating stuff. In the meantime, Alexa, leave us alone. I'm Joe Matthew with Kaylee Lyons. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Britain has given the go-ahead for a major oil and gas project in the North Sea, ignoring warnings from scientists and the UN. The countries must stop developing new fossil fuel resources if the world is to avoid catastrophic climate change. Crude oil continues to advance today. Energy stocks, oil in specific, are higher. West Texas Intermediate crude up 3.9%, 93.86 a barrel. Nadia Lovell is senior strategist at UBS Financial Services, and on surveillance this morning, she told us she likes oil companies.
We know that energy has done quite well over the last few months since we upgraded it 3 months ago, but it has lagged the commodity, and we continue to believe that oil prices are sustainable in this $90 to $100 range. We're looking for 95 into 2024, and so we do think that there's a little bit more to go in the long energy trade. I mean, we particularly like the E&P companies and the oil services companies within energy.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Crude oil right now, West Texas Intermediate, 93.85 a barrel. Among some of the energy names, ExxonMobil up 2.8%. BP, the ADR is up 1.8%. Chevron up 1.9%. EOG Resources up 3.1%. And Pioneer Natural up by 3.3%. Federal Trade Commission is reviving its challenge against Microsoft's $69 billion acquisition of video game company Activision Blizzard. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lyons on Bloomberg Radio.
As we move ever closer to Bloomberg Business Week, we bring you up to date from Washington. Nancy Lyons joins now with world and national news from the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. The U.S. is on track for an October 1st government shutdown despite incremental progress late yesterday in the House and the Senate on rival spending bills. The Senate has come up with a bipartisan bill to delay a shutdown until mid-November, but it's not likely to pass the House. Speaker Kevin McCarthy, meanwhile, says his chamber is moving on some appropriations bills, which will not likely be approved by the Senate. Bloomberg's Billy House says McCarthy is the one under extreme pressure right now.
He tries to project a kind of a rosy demeanor that he solved all the other problems, default problem with before, but this one seems like a new level of intensity, and you can tell his anxiousness at times is starting to wear.
Bloomberg's congressional reporter Billy House speaking earlier with Sound On. U.S. officials say Private Travis King is in American custody and heading back to the U.S. after months of detainment in North Korea. He was the soldier who ran into North Korea during a tour of the DMZ. The Pentagon's Brigadier General Patrick Ryder says U.S. officials secured King's return with help from the governments of Sweden and China. New Jersey Senator Bob Menendez pleaded not guilty to federal bribery and corruption charges at his arraignment today. The Democrat and his wife are accused of accepting cash, gold bars, and gifts in exchange for political favors for 3 businessmen in the government of Egypt. More than half his Democratic colleagues in the Senate are calling for him to step down. Police say groups of teens swarmed into stores across Philadelphia last night in an apparent coordinated effort. They stuffed bags with merchandise and then fled. Police managed to arrest 15 to 20 people. The ransacking followed an earlier peaceful protest over a judge's decision to dismiss murder and other charges against a Philadelphia police officer who shot and killed a driver through a rolled-up window. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Joe and Kaylee.
All right, Nancy, we thank you. You know, we bring you news throughout the day here on Bloomberg Radio. That's why we're talking together. But now you can get the latest news on demand whenever you want it. Subscribe to Bloomberg News now to get the latest headlines at the click of a button. Get informed on your schedule. You can listen and subscribe to Bloomberg News now on the Bloomberg Business app, Bloomberg.com, and, of course, Apple, Spotify, and anywhere else you get your podcasts. How many other places are there to get podcasts? I always do Apple, Spotify. I mean, that's where most people do this, right?
I think so.
Yeah, exactly. Interesting this morning, that something we need to talk about. Kaylee, you were on Capitol Hill to cover some important hearings, Garrett Gensler, Safer Banking Act. But it was the House Energy and Commerce Committee holding a hearing this morning on a suite of bills, including the BOSS and SWIFT Act. And I don't know if you're up to date on this. This was brought forth in May by Congressman Bill Pascrell and Frank Pallone Jr., New York and New Jersey. These are big Springsteen fans. Turns out they're Taylor Swift fans also.
And they wanted tickets, I'm assuming?
Well, I thought, do we want to
or
get
enough of their
backstage here?
constituents did.
The legislation named in honor of Bruce Springsteen and fans of Taylor Swift, I read, blocked when trying to buy concert passes during the recent ticketing fiasco. They want to bring transparency and regulation to what they call the badly corrupted live events ticket market. Did an acoustic version of this highly cliched song that most fans of Bruce Springsteen actually hate. But I thought we'd play it out for you and give you a little bit of an earworm today.
This is taking me back. You know, my first 4 concerts were Bruce Springsteen.
First 4?
And I have never seen Taylor Swift in concert.
I'm actually shocked. Did you try to get tickets and you got blown out because of this whole thing with Ticketmaster?
Took one look at the prices and thought, maybe next time.
Well, I'll tell you what. There are 2 lawmakers looking out for you, Kaylee Lyons. And maybe they are going to get backstage. I'm not sure. The BOSS and SWIFT Act. This is what your elected officials are working on. Funding the government? Not so much. Kaylee, I'll meet you on Balance of Power. I'm Joe Matthew in Washington. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good
afternoon, everybody. Live from the Bloomberg Interactive Broker Studio, streaming on YouTube and, of course, on Bloomberg Originals. It is Wednesday, September 27th. Happy Hump Day, Tim.
Happy Hump Day. It is September 27th. I feel like I'm
finally awake and alive.
Well, it takes a couple days for us to, come out of our whatever we did over the weekend. Hey, stocks bouncing around a little bit. We're actually seeing the S&P 500 flat right now. The NASDAQ is actually higher. The Dow down by 0.2%. The Dow, we should note, is below its 200-day moving average. Carol,
you're bearing the lead. You know that.
What am I bearing?
Tom Brady and Snoop, a chatbot.
I watched this. live. Mark Zuckerberg taking the stage at the Facebook Developers Conference in California, and Tom Brady, Paris Hilton, they're all your AIs.
Whatever happened to the metaverse? I thought that was the big thing.
Well, they did unveil a new Oculus Quest 3.
Yeah, but you know what I mean.
It's going to cost more money.
You know what I mean.
Yeah, they're playing in the metaverse.
All right, we're going to get to all of this in just a moment. Having said that, top of mind is that government shutdown and also a longer UAW strike and an even higher U.S. rate environment. A lot to worry investors. Peter Atwater's back with us to talk and connect macro markets and money.
Also very pleased to have back with us Steve Case, chairman and CEO at his investment firm, Revolution. He's the co-founder, of course, of AOL. It's how I got online first. He's going to talk to us about being an entrepreneur
What's with
today.
Your voice today.
I don't know. I woke up like this. I was hoping you wouldn't notice that.
It's kind of deep and sultry.
It's better than it was early this morning.
Can
I've been drinking tea. I've been drinking tea.
Go there?
Yeah, it's fine.
I don't know. Speaking of kind of going there and being politically correct, later on we're going to have a great guest. Caroline Hirsch is with us of the Caroline's Comedy Club, right? I am very curious about how comics put it together in a woke environment and being very careful about what they can or cannot
Some
say.
of those comedians who've complained about getting canceled are selling out across the country. So I'm going to get her take on what's going on there. We're also going to tell you about the ghost jobs that'll never be filled and how they're vexing applicants and economists. And in the magazine, Carol, the tiny Texas bank that's failed over what appears to be a crypto scam.
Yeah, I can't wait to get into this story. Also, what else are we leaving out? Micron reporting after the closing bell. Did we talk about that one?
Yeah.
Oh, you did?
Yeah. No,
Sorry.
I didn't. I'm just saying that. I'm just
There's a
messing with
lot.
you.
There's definitely a lot on our minds, so we're going to tackle all of this and just really kind of get into some of the big macro stories that continue to really worry and depress investors. Right now, an interesting trade. We're off our lows for the S&P 500 and all the equity averages. Let's get to countdown to the close, starting now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're joined right now by our colleagues Carol Masser and Tim Stenovic. Welcome to our audiences across all of our Bloomberg platforms, television, radio, YouTube, and originals. Carol, another wild day here in the market. I want you to take a close look at your Bloomberg terminal right now and tell me exactly.
I'm looking.
Are you doing that because you know I have computer problems?
Oh, goodness.
I am nothing but a troll, Carol.
You are, man. You are.
Carol doesn't need a computer to do this.
Oh, my God. Well, we are rounding off our worst levels when it comes to the equity trade. So I actually have my Bloomberg up and running because you know what? You can always count on your Bloomberg to be there. Having said that, man, what's going on over at Meta? I thought the metaverse was it. What they're doing really is focusing on chatbots all of a sudden because I feel like they're getting bitten by the AI bug. It feels like everybody's getting bitten by that AI bug, including that Hollywood contract, the writer's contract. There is a provision in there, Tim.
Yeah, the writers, Hollywood writers, are actually winning on a promise that no robots are going to get screen credits. We should note that this was one of the main sticking points over the last 5 months, Romaine.
Yeah.
But, we're starting to get some details of what the writers are getting and what the studios are actually getting.
They don't get screen credit, so do they get to still write the scripts? They just don't get credit for them?
No. No, they get to get trained on scripts, so they can train AI using old scripts, which is actually a really contentious issue and something
rules,
the writers did not want. Yeah, there's rules laid out.
Governing the use of AI. First, I think contract to do so.
How do the robots feel about this?
We haven't asked them.
Okay.
Yeah.
They're going to form their own union.
They're coming for you, Romaine, right now, apparently, because they're a little upset about,
They're coming for Romaine. They're coming for all of us. But let's talk about ghost jobs. We're roughly a month away from Halloween.
Who's picking these topics, by the way?
We picked this one together.
It has a Katie feel, don't you think?
It sounds spooky.
Taylor,
It is spooky. Let me tell you about it. So government data indicates that there's about 9 million jobs available in the U.S. right now, but increasingly,
right?
well, you have job seekers becoming frustrated because they're being ghosted by these employers. There's this growing feeling that a lot of these companies with openings don't actually intend to fill all of those jobs, and that casts some skepticism over that JOLTS data that we analyze all the time when we talk about this tight labor market and still so much demand for workers. If this is real, this ghost job trend, it would place a question mark at the end of that.
I'm confused though. Like, what's the incentive for them to do that? To list, basically.
I was asking the same question, so I called up Molly Smith, who wrote this story along with Matt Boyle.
That's good. That's proactive.
And she said, "Yeah,
I just wait till I come on the show here and ask."
That's what we do. We're reporters. And she said there are kind of three things going on right now. One is that a lot of HR departments were thinned out over the last few months when people have gotten laid off. Two, the balance of power is changing when it comes to employees and employers. So now employers don't actually have to call employees back if they find someone else to fill it. Remember, employees were in the driver's seat for so long in this post-pandemic economy. That's not happening anymore.
Yeah, I mean, and that's really been the big question. We've talked about this a lot, of course, on the summer of strikes, and of course the strikes that still exist here. This idea here is that whether the leverage that labor unions and really workers overall have had over the last couple of years, whether that's finally waning.
And that's why it's so interesting to see all of these strikes really come to a boil over the past few months, because the labor market has been very strong for years now, and maybe employers are getting a little more leverage back, but still you have the unemployment rate under 4%. That's still very hot.
Yeah, it certainly feels that way, but we do care, because if this is what's going on and maybe those openings aren't really accurate, maybe the labor force is ultimately not as tight as we all thought. Anyway, all right, we're going to come back.
I mean, I saw a post for a news anchor, and well, I mean, I guess maybe that's a ghost. We don't need to worry.
For business, for Bloomberg Business Week?
I don't know. I can't tell you, Carol.
Don't ghost me. All right, guys, we're going to be back in less than an hour's time. Our cross-platform, we will continue counting you down to the close on this Wednesday. Radio, TV, YouTube, Bloomberg Originals. Join us for Beyond the Bell at 4 p.m. Wall Street time. Traders, you know, Tim, things like the cost and impact of a possible government shutdown, a protracted UAW strike, and then a Fed that is certainly hell-bent on getting inflation back to that 2% target.
Yeah, the worries continue to play out in trade, where stocks are bouncing around quite a bit today. They were lower, and now they're at session highs. And also Treasury yields moving higher. Someone who thinks all about it and connects the dots for us is Peter Atwater. He's adjunct professor of economics at William & Mary, who before that worked in financial services and with hedge funds. You might recall that he coined, Carol, the term K-shaped recovery.
Yeah, he did indeed. He was recently on to talk about his new book, The Confidence Map, which came out in July. So delighted to have you back. How are you?
I'm doing great. Glad to be here.
Well, it's great to have you here. How are you thinking about kind of the things that are coming at investors right now and just the world at large?
Well, you know, there's a lot coming at investors, but what's been so striking to me about the past couple of weeks is the absence of emotion. We've watched the sell-off in bonds, we've watched the sell-off in stocks, we've watched oil prices rise, and there's this remarkable at ease that investors seem to have, even though markets have gotten oversold, or in the case of oil, overbought. And it's really inconsistent to me with what prices would suggest. So I'm perplexed that people are taking all of this as calmly as they are, particularly because it wasn't, 6 months ago, interest rates were at this level and people were panicking about the banks, and it's a big yawn today.
So what do you attribute that to?
I'm a little worried about real complacence behavior on the part of investors, because there's no sense of that things could get worse, whether in terms of the economy itself or higher interest rates or inflation. There's almost this sense of, okay, this is what it is. Until the economy gives us signals that it's weakening, or until the consumer rolls over, we're going to count on some sort of miraculous landing of this.
One thing that Carol and I talked about this week was the depletion that we're seeing when it comes to the cash savings of Americans.
Right, household balance sheets.
Household balance sheets. I mean, pretty much everyone except the top 20% has run out of that excess cash savings that they had during the pandemic and post-pandemic.
I worry about those at the low end where the cash ran out a long time ago. I think it's interesting that folks are only taking note of it now, but for those at the bottom, this is a phenomenon that's now more than a year old. And so you're starting to see that roll into delinquency rates, particularly in automobile loans and credit card loans. And the automobile loan one worries me because particularly for low-income individuals, the car is the job.
Yeah.
And they don't have the flexibility of work from home that many above do.
Peter, what do you make of, we were just talking about with Romaine and Katie on our TV side, about the ghost jobs that will never be filled. Are you comfortable with some of the data points that are out there, including the labor statistics here in the United States?
You know, I'm comfortable with the statistics, but what is clear even with these statistics is that jobs are not equating to confidence, and that you've seen no material improvement in mood even though jobs have come back and people are working more. And so I think we do ourselves a disservice to think that having a job is going to boost confidence.
I think it's funny because I think Tim and I talk a lot about like the things that we're paying for in life right now, whether it's homes or rates on buying a home, right?
Insurance is super expensive now.
School, like everything seems super expensive right now.
Yeah,
and we have jobs, and we feel pretty confident about it.
These are the things that are at the low end of the hierarchy of need. So we're not talking about luxury goods where you can do with or without. We're talking about essentials, and so that creates this sense of vulnerability where people feel hostage to either the price scarcity or the supply scarcity or the demand scarcity.
Everything you're talking about, we could have talked about 6 months ago. We could have talked about in January before the run-up of close to 20% on the S&P 500 this year, which, by the way, has now been pretty much cut in half at this point. So, Peter, what were people ignoring, and what does it portend for the future?
So if I look at the markets over the last 6 months, I think the indices are masking what's really going on, which is this enormous stratification where the low end, Russell small cap stocks are, barely, I don't know this afternoon if they're up for the year.
You talk about this all the time, Carol.
We talk about the small caps underperformance in a big way.
This is an indication of declining confidence and declining success for small businesses. And so I worry that investors, by pouring money into the thoroughbreds, into the Amazon and Apple and Google and Microsoft, are being misled by the fact that things are troublesome below the surface. The other, 495 companies.
The other thing I guess I would go to is that when we talk about rates and we constantly keep going, well, highest rate since 07 or the 08 time, and that time really felt like the bottom was going to come out from under us. It doesn't necessarily feel like that time today that bad. But then again, is it because we're not necessarily really reading what's going on? Are we missing things?
Yeah, and I think we're still in this unwind from negative interest rates 2 years ago. And so we tend to look at it on an absolute basis. But it's going to be interesting to see how balanced investors feel when they get their statements at the end of the quarter, where both their stock portfolios and bond portfolios.
I was going to say a lot of people don't wait to get the statements. They, log in when they see red.
I check periodically. But you're right. It's like a reality check of it's again a reminder not everything goes up.
Yep.
But when we do go, is there something though significant when we do make those references back to 2007, 2008, which was such a significant time in this country, as well as certainly within the financial market universe? Are we setting up for another period that's as rough as some of the stuff we went through there in terms of the markets?
So I think what's been so interesting in the past 2 years is we're seeing a concurrent unwinding of extreme sentiment in both stocks and bonds. The trade isn't risk on versus risk off.
Yeah.
It's risk on versus risk out. And you're seeing that in the growth in money market funds where money is leaving the market outright. And that's a trend we need to keep a lot of attention on, because 07, 08, other than a few weeks, there was this rotation into bonds out of stocks. And that we're not seeing that, even though yields are significantly higher than they were recently.
So where's the money going?
It's going into money market funds.
Over 5% in a money market fund?
Yeah.
You just set it in there until,
and you're earning
higher.
more than 10-year yields today.
Yeah.
I mean, so cash has become a viable alternative. And as I said, with stocks and bonds moving down in price together, that it could start to feed upon itself.
Will it stay that way? Who knows?
Who knows?
Who knows?
But I mean, at a certain point, bonds are going to become attractive to some of these people, right?
So that's the question. If bonds were a bubble, if negative interest rates were a sign of extreme sentiment, then we're likely to see that rising rates, falling prices don't draw a crowd. That we've seen everybody who was going to buy a bond did, and much as you see when stock market bubbles unwind, lower price doesn't draw anybody. You get the occasional bounces, but it's a perpetual unwinding machine.
Is it safe to say, we've got about 45 seconds, then you're going to come back and stay with us, and we're going to talk some more, but is it safe to say, and I think you mentioned this earlier, we've never come out of a pandemic. We've never come out of a time period like this. We don't really ultimately know how it all settles.
We don't, but let me create a bull case here. To talk out of both sides of my mouth like an economist. That's fine. We've talked about all this cash going into, or all the money going into money markets. That then becomes a potential source for further enthusiasm if sentiment were to bottom.
The cash on the sidelines
The cash
grows.
on the sideline, and there's a lot of it. I mean, there's an enormous amount of cash sitting there, and so you could have this powerful reversal where the crowd says, that was it, that was as bad as it got, and we're back to the races.
I mean, if you're saying that like the S&P 500 at 4,500, you were regretting not putting some money in, now it's at 4,200, and you're like, okay, maybe it's time, or there could be further to go.
Well, and I can create a bull scenario, which is if the dollar is then going to fall,
right?
You start to see a declining dollar. That's a huge tailwind for these mega caps.
Right. And we talk a lot about the strength in the dollar so far, but if that trade flips. Peter Atwater is going to stay with us, of course, of William & Mary, but also an author, and we're going to talk a little bit about the government potential shutdown and that impact.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long. And Bloomberg looking at a mixed session right now. Choppy trading day. We've got the Dow down 23 points, a decline of about 0.1%. S&P up 9, up 0.2%. The Nasdaq Composite Index up 60, higher by about 0.5%. Bottom line here, stocks are struggling for direction as treasuries sell off. Investors are contemplating the prospect of higher rates and rising oil prices. Right to energy, West Texas Intermediate crude up 3.8%, 93.82 a barrel. Did see a 94 print earlier on. Brent crude now at 96.68 barrel of Brent, up 2.9%. So the S&P up now by 0.2%, higher by 7. 10-year yield 4.61%, the 2-year 5.13%, and spot gold down 1.2%, 18.77 the ounce. As for the market backdrop, Callie Cox is investment analyst at eToro USA Securities.
You know, if you look around pockets of the stock market, I think you can still find value. You just have to be very careful and understand what your time frame is, because, you know, we're in an odd environment right now. Inflation is picking up. You know, the economy looks strong. That's good news. But it also, you know, makes things tricky because it gives you more choices on where to put your money.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. After the bell, Micron Technology is set to provide one of the first tests for investors, hoping that tech earnings will rescue a stock market in free fall. We've got Micron right now lower by 0.6%, also reporting after the close of trading. Jefferies Financial, Jefferies now down by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pell. I really appreciate it. Bloomberg Business Week is brought to you by Glenmead. Glenmead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit Glenmead.com to learn more.
It really is the sultry tips.
Whenever my voice does anything, Carol, I can count on you to draw more attention to it.
This is what happens when you have 4 brothers, man. You got to come back at it. Anyway, we hope you're not getting sick.
I'm not. I'm fine.
All right, everybody. We fingers crossed that Tim doesn't get sick. Fingers crossed that we avoid a government shutdown, because the U.S. is on track for one on October 1st, despite incremental progress late yesterday in the House and Senate on rival spending bills. Senate leaders introduced their own bill to avert a shutdown and cleared a procedural vote, while House Speaker Kevin McCarthy was able to start House debate on a series of conservative full-year spending bills. Sad to say, we've seen this political drama and actual shutdowns before. So let's get to it and the latest and analysis. With us is Bloomberg News congressional reporter Eric Wasson on the phone at the Capitol in Washington, D.C. Still with us, Peter Atwater, adjunct professor of economics at William & Mary and author of The Confidence Map. And Eric, I want to start with you. Give us some color about what are you hearing? What's the environment in and around the Capitol as we count down to that possible shutdown?
Well, you know, I think really the focus is on the House, where even longtime Republican aides and operatives are saying it's just chaos. They haven't seen anything like it. It's just an inability, really, of the House Republicans to come together on even an offer. You know, they proposed a stopgap spending bill of between 31 days or 45 days, try to attach that to some border security provisions and make the president come to terms on a border deal. But they can't even really get the votes to pass that. So they're not even off of first base here. And meanwhile, the Senate's moving forward with this bipartisan deal. You know, it's about $6 billion in Ukraine aid, $6 billion for disaster, funds the government for 47 days. Now, you know, if the Senate passes that, which it likely could do by Sunday, government shutdown will already started, but there'll be a lot of pressure on McCarthy to bring that up. But he told his conference he's not going to bring that up today. And so we're really heading to a shutdown.
Eric, you've seen this play out before. So just give us an idea of if the government does shut down, or maybe we say at this point when the government does shut down. Help us by looking into your crystal ball and giving us an idea of when things open up again.
Well, one intriguing possibility is that House moderates conduct a rebellion. We've had a couple of stories on the Bloomberg about that. They have some procedural mechanisms. One's called the discharge petition, where they could, within about 9 legislative days, force a vote against the Speaker's wishes on that Senate bill or on their own rival plan, which would actually extend government funding to January 11th. You know, to be viewed as a betrayal of the party, but they're arguing, well, a lot of the conservatives have voted against the majority speaker candidate and voted against House rules and other things. So they've also shown disloyalty. So, Mike Lawler of New York, one of the moderate Biden district Republicans, is leading that effort. He can probably bring along 5 other New York Republicans to help him, and that's all it's really needed to trigger this process. So it could be as little as 9 days. There are ways the speaker could try to thwart that. On the other hand, we could see a resolution quicker. It just really depends on these moderates and whether the speaker ultimately decides, just the shutdown's just not worth the pain, not worth risking the House. He could face a motion to oust him. At that point, it'll be up to Democrats whether they bail him out. There's probably enough conservatives that he would, be able to be ousted without Democratic help.
The political process. As we said earlier when we began talking with Peter Atwater at the top of the broadcast, Peter, one of the things that's on the minds of investors is this potential for a government shutdown. There is potentially an impact when you don't have government programs, the expenditures going out, you don't have employees being paid. There's an impact. I mean, how do you think about it? I think about William and Mary. They spend a lot of time in terms of policy and the connection of policy and economic impacts.
Yeah, so I often say that policymakers follow mood. And this is policymakers in me, here, now mode. The only thing they care about is their individual survival. And with mood falling, as indicated by the markets, that's going to make getting a resolution together very difficult until there is ultimately capitulation, where some group is led to believe that they're vulnerable in this process. And what we see today is a lot of, between the gerrymandering and the heavy one-statedness that we have in terms of political alignment, that vulnerability is not showing up anywhere yet, anytime soon.
So, Peter, your book is called The Confidence Map, Charting a Path from Chaos to Clarity. Chaos is a word I think a lot of people would associate with what's going on, at least in Washington right now. Eric, you might agree or disagree, I don't know. Do Americans still look for confidence in the government, or have we kind of said, you know what, it's not happening?
The bond market would say they don't. I mean, the markets yawn over what's happening in Washington is remarkable to me. But that is the nature of the investing crowd today.
But is it yawning because they know it's going to get resolved, and it's happened before?
Yeah. I think we're numb to it. But therein lies the danger. Yeah. That belief that ultimately Congress comes to its senses is based on the past, and the environment, the mood environment, at least right now, suggests that may not be the best assumption.
Eric, come on back in here, because it was interesting what Peter said. Like, I do think that there is such a big yawn. I think if I brought this up with a lot of my family members, they'd be like, yeah, okay, tell me something I care about. But I do wonder, Eric, in terms of, do members of Congress, are they getting calls from their constituents? I mean, I'm sure corporate folks might be, if they're not going to get some kind of, government contract payout or something. But I just wonder, do lawmakers hear from the voting members of the U.S.?
Well, some of them say that they aren't hearing, some of them say they are. But I would say we have a couple of really good things on the terminal right now. One is a great story which talks about which lawmakers have the most federal workers in their district. And one of them is Matt Gaetz, who's leading the government shutdown charge. He has the third most number of federal workers in his district. So, these are people who are not necessarily acting in the interests of their constituents. I'd also point out another story I wrote on the terminal, which is about the economic impact. We discovered on BGov, Bloomberg government data, that $1.9 billion per day in lost or delayed revenue to federal contractors. And that just is going to grow. You're going to see service contractors laid off and never get back pay. You're going to see production lines disrupted. And who we talked to in that story, basically, they said, this is the time with high inflation, high interest rates. You're going to see a cash flow crunch for some of these small contractors. You're going to see some companies even go belly up in a 6 to 7 week shutdown. So, I think the longer it goes on, the longer the clamor, the bigger the pain, as your guest said, and someone's going to have to capitulate.
Eric, that is such a really good point. I mean, Peter, I do think about that. Smaller companies, man, they live, I feel like, from money in to money out. Like, they just live from day to day in terms of their, financial books, if you will. I mean, that is a possible cost to all of this.
And I think it's yet another moment where those on the left and the right fail to appreciate the vulnerability of those at the bottom in business and individually, and ultimately the potential that those at the bottom say enough of both left and right.
What happens when, or if that happens, Peter?
So I think you start to see grassroots movements where you see pockets of both red and blue individuals and businesses at the low end say, we've had enough.
I feel like you need to Occupy Wall Street or Occupy Corporate America, 2.0
But I mean, maybe
or
that was the
something.
Tea Party, or maybe it was the rise of Trump in 2016.
But I think that, and Eric may want to weigh in on this, is that the environment today is uniting.
Well, uniting everybody.
Those with similar vulnerabilities.
Well, Eric, we've got only about 25 seconds. What do you say to that about unifying people
Well,
with...
I think one of the interesting things is how split America is. You've got almost a 50-50 country, and that's why the margin is so small, and that's what's really causing the problem here, is that McCarthy's majority, if he had 20-seat majority, this wouldn't be the issue we're seeing today. The fact is he can only lose 4, and there's a very small number, 5 to 7, who are basically saying, we won't vote for this starting position CR. So I think that's an element of it too, this small House majority.
Right.
And, his personal skills. Nancy Pelosi had a small majority to get more through. He just isn't able to get those last couple of votes that he needs.
Eric Wasson, we know you're busy. Thank you so much. Congressional reporter at Bloomberg News. Peter Atwater, President of Financial Insights, and check out his book, of course, The Confidence Map. Thank you so much.
Let's get a check now on latest world and national news. Nancy Lyons is in the Bloomberg 99 newsroom in D.C. Hey, Nance.
Thanks, Tim. The deadline to avoid a shutdown is midnight Saturday. The Senate has passed a bipartisan continuing resolution to give themselves some time to negotiate spending bills. But the House is not expected to even take up that CR, with hard-right Republicans demanding those spending cuts. Michael Linden, who worked at the Office of Management and Budget, says the two sides already agreed to spending levels when they resolved the debt ceiling debate.
We did agree to a top-line agreement well in advance of the deadline. The Senate has been proceeding according to the sort of normal appropriations process, passing individual bills out of committee on a bipartisan basis. The House has decided to go a different direction. I don't know that there's any process or deals that can fix something that's rotten inside one caucus.
Michael Linden spoke with Bloomberg Sound On. 7 GOP presidential candidates will be participating in tonight's second debate at the Reagan Presidential Library in California. Missing from the lineup, though, is the frontrunner, former President Trump. He'll instead be in Detroit to meet with auto workers at a non-union parts supplier. At the last debate, few of the candidates took the opportunity to go after Trump, but they will also probably be questioned about the possible government shutdown. The U.S. soldier who crossed into North Korea without permission is back in American custody, and State Department spokesman Matthew Miller says Army Private Travis King is on his way back to the U.S.
Earlier today, he was transported to the border between North Korea and China, where he was met by our ambassador to the People's Republic of China, Nicholas Burns.
Miller says King is expected back later today. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a mixed day, choppy session. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. In that choppy session, stocks with an aggressive bid off session lows. The Dow is currently down 55 points, was down 312. S&Ps are higher by a point, and NASDAQ gains 20. The U.S. 10-year yield jumps to 4.61%. Gold is down 23. Oil continues climbing, and Bitcoin is higher by 0.5%. Among the main 11 S&P sectors, leaders were energy and the industrials. Utilities and consumer staples were under pressure. And leaders to the upside in the Dow, Intel and Chevron, while Procter & Gamble and McDonald's led to the downside. Regarding earnings, paychecks beat estimates, and in U.S. politics, Senator Durbin says Menendez should step down. In the tech space, Cloudflare partners with Microsoft to run AI models anywhere. And in other news, crypto exchange Kraken plans to push into stock trading. Wrapping things up, Micron reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, you know what's going to drive you crazy, Tim Stenovic? This market environment.
Yeah, this is enough to drive people crazy.
Poor Tim, like we're getting ready for our simulcast with our TV colleagues, and we have to have, decliners and gainers.
And we're organized. We get this stuff done before the show. We're like, what's down 3%? That's not going to change.
Yes, it is on a day like today.
Thanks, Meta Platform.
We
now
definitely
it might be down again.
I know we are kind of rolling over again.
Yeah, it's down again.
All right, so let's get to it. Our Drive to the Close guest. Delighted to have back with us Stephanie Pierce. She's CEO of Dreyfus Mellon and exchange-traded funds at BNY Mellon Investment Management. As we said, back with us, joining us on Zoom in New York City. Stephanie, how are you?
Carol, it's so great to see you. Hello, Tim.
Hi.
Carol.
It's here. It's great to have you back with us. It is kind of another wacky trading day, and we, talk about the concerns coming at investors, whether it's the possibility of a government shutdown here in the U.S., the UAW strike going on longer, the worries over this higher rate environment. It feels like investors aren't quite sure what to do. How do you kind of think about what are the important macro trends to pay attention to?
Well, as you know, Carol, we sit here in our short end of the curve world where we talk about lots of really interesting things in that space. From a macro perspective, as you know, we are surrounded by smart people in terms of our economists and our portfolio managers. And we actually think cash is a pretty good place to be right now. We're certainly in this, I would call it, higher for longer environment than people thought a few months ago. There's probably one more hike ahead of us. And at some point here, we want to start positioning and hedging portfolios for lower rates, but we're not quite there yet, right? And so, that's certainly something we're guiding investors to think about. Now's the time to start extending duration. Of course, we in cash land, extending duration means about a year for us, but certainly feeling really good about cash as a very attractive investment, giving other asset classes a run for its money, so to speak.
Well, the thing is, and I was saying this earlier to Peter Atwater, I mean, we've been in an environment where all year cash has looked like a pretty good investment, but you missed out on a run-up of close to 20% in the S&P 500 that's since given back quite a bit of those gains. How do you know when the right time is to get back in, even if cash continues to be attractive?
No, it's a very, very good point. One of the things that we advise when we think about clients that we work with across our ecosystem at BNY Mellon, we have a wealth management business, we have Pershing, we have our very large investment management business. So from a fiduciary perspective, timing the market is always a challenge, right? We all know the statistics about how well that works out. So generally, we advise clients to stay with a strategic allocation, and that allocation in many cases includes cash. So that's the way we think about it.
And you're launching some new funds. Tell us about that.
Well, I have to say, today is a sparkly day for me. Yesterday, we launched the Dreyfus Spark shares, which are a new share class of our largest flagship government cash fund. And even though, we talk about cash as being not that exciting, we think, as Carol, we've talked about it before, cash is not only interesting, and I'll use the word sexy from a yield perspective, but what we're doing with this fund and this share class, we're really excited about. So the Spark shares enable our institutional clients to basically give back, do well, and do good. So they get the same yield as they get on the full fund, same liquidity, all of that. But we are actually taking 10% of the net revenues on this new share class that we earn as a company and contributing that to the charity of the client's choice. So we get to sit on the same side of the table with clients and help them think about how they can make their cash work harder by putting that money in a place that really matters to the hearts and the minds of their employees, their board, or their stakeholders. So we're really excited.
That is so interesting. Why do that, and why do that now? I mean, forgive me, good thing, no doubt about it. I love to see things like that. But you know what I'm asking. Why do that, and why do that now? Has there been demand? Like, why?
Yeah, absolutely. So Carol, about a year and a half ago, as you may recall, we launched a share class that we called Bold, also a dedicated share class off our largest fund. And that stood for Block Opportunity for Learning and Development. That share class now stands at about 14 billion or so, having launched it with 500 million. And so what we found through that is a share class that really is dedicated to helping fund students in need at Howard University by, basically filling that gap when they run out of money junior year and have to drop out. And it's been very successful. Our clients have loved it, but many of them said to us, there's something in my community, there's a place where my employees volunteer, there's something we give to as a company that's near and dear to my heart and my backyard that I would love to give to. So if there's a way for you to facilitate that, please call me. So we spent a few months, couple quarters thinking about it. And that's exactly what we're doing. We launched with $1 billion 2 days ago. We're really excited. And, or yesterday, sorry. And, clients have been really interested. So, really what we're doing is allowing them to what we call spark change or enable change in their own communities.
Is there any sort of tax benefit to you guys for doing something like this?
We're really not doing it for the tax benefit. But when clients ask us, gee, do I get the tax benefit? Of course, we are making the donation. So that would not accrue to the investor. It would accrue, I suppose, to us in some way. But that's not really the goal of it, right? The goal is to really make an impact. And that's exactly what we're doing.
Hey, listen, Stephanie, what can you tell us, though, about just overall trend flows, like where the money is flowing in, where the money is flowing out right now?
Absolutely. So if you look at just the space we've been talking about in cash, we have clearly seen, as I said, many investors, both retail and institutional, looking at this as actually an attractive place to put money, just simply given the 5+% yields. Of course, we are seeing, as you referenced earlier, people be much more comfortable as we think about the economy potentially heading for a soft landing rather than maybe a more concerning one, as we talked about a few months ago. And as that rhetoric has improved from the Fed and in the market as a whole with the data that we've seen, certainly investors are starting to extend out not only in terms of duration in fixed income or money markets, but also in overall portfolios from a risk perspective. So we are seeing some re-risking in the overall environment from investors right now, in addition to this continued attractiveness of cash.
Wait, re-risking, so taking risk off or adding risk on?
I think feeling more comfortable that the market is starting to, behave in a manner that recognizes we're probably heading for a little bit of a softer landing than what was expected previously. So that's really what we're seeing is investors being a little more comfortable with the markets here.
What does the rest of the year look like? Help us, get some clarity here. We're very confused here.
We are. Sure. Let me pull out my tarot cards. So for the rest of the year, clearly, as we've seen, the Fed, was on pause this month. No surprise. We continue to see firmer data. So we do expect that this sort of market pricing in about 50-50 chance of another rate hike is probably going to happen. And that's, continue to see the rhetoric that's the case. And then as you kind of round the corner into the end of the year, the expectation is that, markets will start to position, certainly in our markets, we're starting to position for, hedging against lower rates at some point in the middle part of next year. But again, generally, we don't think that will be an aggressive path downward, as was previously, expected or hoped for. We think it'll be more moderate and, again, higher for longer. So against that backdrop, again, soft landing is certainly where I think the rhetoric has gone. And that's really what we're positioning for as well in our portfolios.
Are you buying the rhetoric? Just 10 seconds. Yes?
Generally, yes. Again, we look at what markets are pricing in.
Okay.
Our goal is to be, yep, let you go.
Okay. Listen, always fun and always delighted to see you. Stephanie Pierce of Dreyfus Mellon and ETF funds at BNY Mellon.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Among the names reporting after the close of trading today, Micron Technology and Jefferies Financial Group. Jefferies now down by 0.1% ahead of earnings. Micron is up by 0.3%. Emirates President Tim Clark says the world's largest international airline is charting an aggressive post-pandemic growth plan, taking a serious look at ordering Airbus's largest long-range model and potentially increasing a commitment for Boeing's 777X as it prepares to eventually pare back its huge fleet of double-decker jumbos, the A380. Clark spoke with our Guy Johnson at the Lisbon Aviation Festival about the airline's outlook.
We've got a lot of big plans for the airline going forward. New fleet, larger numbers, larger network, working with Fly Dubai. So I think it's going to be quite a good story. We've learned a lot from COVID. It reset our thinking, reset our processes, and we came out of that having made the largest profit we've ever made last year.
And you can hear more of that conversation on the Bloomberg Markets podcast. You can download it wherever you get your podcasts. Meta Platforms is introducing its latest lineup of head-worn devices, staking fresh claim to the virtual and augmented reality industry, just ahead of Apple pushing into the market. The company today officially unveiled its Quest 3 headset. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, just a few minutes left in today's trading session, the Wednesday trade. Carol Messer along with Tim Stenivek. We're going to head over to our TV colleagues and talk about, whoa, what a boring day. Not a boring day, man. Poor Tim, you've been like, shoot, my decliners are not decliners anymore.
You know, if those are my biggest problems in the day, Carol, then it's a successful day. Okay, that's all I'm going to say.
You have such smart perspective.
Oh, thank you. Hey, did you know, yesterday we got the news that Target was closing 9 stores. Yeah, because of shrinkage. Yeah. We chatted about that, one here in New York City. We saw some in Portland, Oregon, California as well.
It's a thing, though.
It's a thing. Today we're getting word that Philadelphia looting has hit Apple, Lululemon, and this as retail theft rises.
All right, so here's what our reporting has shown. At least 20 people arrested after stores in Philadelphia were vandalized and robbed Tuesday night, last night, adding to concern about a wave of retail thefts across the U.S. So as Tim mentioned, Apple, Lululemon, Foot Locker stores were hit, with the incidents caught on cameras and shared widely on social media, which I'm assuming maybe many of you have already seen. Acting Police Commissioner John Stanford told NBC 10 Philadelphia that it was caused by a, quote, bunch of criminal opportunists. Or maybe, I also wonder, is this like an economic signal, too, of people who are struggling? And I'm not justifying it, but we often, like we talked about the household balance sheets.
Yeah.
I also that not everybody is managing so well in this environment.
I think that's a really good point. I also wonder, Carol, if I'm not a conspiracy theorist, but were there other reasons why these stores were closed? And I know theft is real. I know shrinkage is happening.
I agree. Oh wait, a company like kind of burying, like what like we talk about the kitchen sink, you throw everything in, and
maybe these were underperforming stores.
Correct.
Why are some stores closing in these cities but not others? Target was quick to point out how many other stores it had in these cities that continue to operate and how many people it employs in some of these cities. So I'm just wondering.
Target reports November 16th. Retail earnings, that's often at the kind of tail end of the next earnings cycle, but it'll be interesting to see what we hear from, in general, the retail sector about what the environment is and about this issue, which I feel like I don't remember talking about shrinkage years ago. I don't know, is it a really new phenomenon? But nonetheless, it seems to be happening and affecting the retail environment.
I think you bring up a good point about the way it's a, sentiment check on the way that people are feeling.
Yeah, right? I mean...
Or is it just easier to organize these flash mobs? Is it due to changing legislation around
Peter Atwater is saying, is it really worse than maybe the sentiment? Are we missing something? All right, don't miss our simulcast. Beyond the Bell starts now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld. We're counting you down to the closing bell. And here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser and Tim Stenivek. Welcome to our audiences across all of our Bloomberg platforms on another volatile day here for equities, commodities, and of course, treasuries alike.
Is it the meta effect? What is going on today? I can't make sense of it. I mean, I'm looking at a meta chart, but it might be true of like almost every equity chart because we've had quite a turnaround from about.
Do you have one of those meta headsets? Those, what are they called? What do you call them now?
Oculus Quest.
Oculus.
Do you have one?
Sounds like Tim has one.
I've dabbled. I don't have the 3 yet.
Did you see how he got that so?
I mean, I pay attention
What do you do on that, Tim? You just play games?
Yeah, you play games. I've messed around with it a little bit. There's some fun games. I did boxing on that. That was a fun little workout.
You could just you could box in real life.
Yeah.
Oculus Quest.
Yeah.
I think Choppy.
I didn't realize you had that much free time, Tim.
I don't. Okay. No, this was my workout. This was my workout. Yeah. But I do think choppy is a good word to describe today's trade. It's been a while since I've looked at a stat like this, but we moved between gains and losses on the S&P 500 at least a dozen times today. So investors kind of thinking, okay, which way are things going to go?
Did you count that?
Yeah, I just did. I counted it on the Bloomberg terminal.
That sounds painful.
SPX, GIP, and then I used my finger to count.
Did you really do that?
Yeah.
That's cool. That's no, that's high finance. And I was saying to Romaine earlier that it does feel choppy.
That's AI at work, right?
In the stock market, no clear direction there. But then you take a look at the bond market, the message is clear. Yields are higher right now.
Yeah, absolutely so. And that appeared to be the big driver. About half the stocks in the S&P are lower. About half the stocks in the S&P are higher. You put it all together, and the net effect is really a market that is unchanged on the day. Of course, it takes time for these numbers to settle, but right now the S&P 500 right around 4,274, which is right around where it was yesterday at the close, basically unchanged here on the day. The Dow Jones Industrial Average did move slightly lower here on the day, down by about 0.2%. The NASDAQ Composite higher on the day by 0.2%, while the Russell 2000 is going to finish the day as the relative outperformer higher on the day by about 17 points.
All right, we're going to get into industry groups in just a moment, but I do want to point energy, really the outperformer. This is oil jumps to a one-year high, has to do with levels at Cushing dropping to the lowest since July of 2022. Again, these supply-demand dynamics at play. But, you know, Katie, I feel like we continue to talk about energy being really an outperformer.
I'm going to do that right now. You take a look at the industry groups. Energy up about 2.5%. We all know this story. Oil prices in particular through the roof. That's benefiting the equities as well. Capital goods also saw a strong day, as too did some of the semis. And of course, we're awaiting Micron results after the bell. You go down the list, there is more red than green. You can see it down at the bottom. Autos not doing too hot today. And utilities, interesting. One of your defensive plays off by about 1.9% today, Carol.
All right, let's.
And I just want to, just before we get to your gainers here, I just want to point out in the energy space, Exxon at a record high, closing at a record high today. And remember, I mean, the last time we had that record high, I think, was back in February of this year here, so quite a round trip.
All right, do we want to mention Micron, guys?
Yeah.
Let's do it. Fourth quarter adjusted operating loss, $1.21 billion. That is just a little bit light. Estimated loss was $1.25 billion. Adjusted loss per share, $1.07. Estimated loss was $1.18. We weren't looking for good numbers from Micron. That certainly was, we were getting kind of some guidance from the company.
Yeah, I mean, certainly so. But I think what more people are interested in is where we are in that sort of memory chip cycle. Obviously, any commentary they might have about artificial intelligence and how their chips, if at all, sort of fit into that, given that NVIDIA has sort of sucked the life out of the room when it comes to the chip space here. I haven't actually had a chance to go through this release here, but it'll be interesting to see whether the guidance that they give going forward is going to be enough for investors to sort of placate them that there is a longer-term growth story here.
Well, Sanjay Mehrotra, Micron Technology President and CEO, in that press release remains saying, quote, our 2023 performance positions us well as a market recovery takes shape in 24, driven by increasing demand and disciplined supply. Here's your AI shout out. We look forward to record industry total addressable market revenue in 2025 as AI proliferates from the data center to the edge.
Well, but back up here. They're saying industry total addressable. Okay, well, that's good for the industry. I mean, how much of that is going in there?
But they're saying it's going to go from, you know, the data centers, so, you know, those in the cloud and those on premise, as well as to the edge. It's going the whole gamut. It's running the gamut. But you're right. They're not giving any detailed guidance on that.
And I mean, we'll see what comes of the earnings call, but it seems like after-hours traders sharing some of Romaine's skepticism. You see shares down about 2%.
And I just want to interject again here, too, because there are other headlines, too. This is regarding the forecast heading into what is now their fiscal first quarter. They're saying gross margins are going to contract by 2 to 6%. The street was looking for actual growth in those gross margins. So I am curious as to where this is coming from, whether there is maybe a spending story here that investors need to parse, or maybe something else is going on under the hood, Carol.
Yeah, and this is why I said, like earlier, they were predicting this fourth quarter that margins were going to be down. Fourth quarter adjusted gross margin was down 9.1%. The estimate was for 10.2%. We were expecting some of that. But as you say, what they have to say about the first quarter and the outlook, certainly some negativity. And you see the stock kind of kicking around. Right now it's down about 1.8% in the after hours. So we'll continue to parse those numbers and see what other additional commentary we get, certainly from the company. All right, let's go flip side. Let's go to some of the gainers, if we may. Paychecks among them. This was top in the S&P 500 and the NASDAQ 100 throughout the day. This company reporting adjusted earnings per share for the first quarter that did beat the average analyst estimate. Stock is a little changed on the year, but you did see it up about 3.4% in today's trade. DNA, Ginkgo Bioworks Holdings. Talk about a wild trade today. Up about 20% at its highs today. Dropping off of that, but still with a gain of about 2.9% by the close. Did hit a 52-week high intraday. yesterday. News, the company, healthcare firm, of course, collaborating with Pfizer to develop some new RNA drugs, so some enthusiasm in that one. And Levi Strauss, higher after Cowen started coverage on the company with an outperform rating. They put a $16 price target on it, the stock closing at $13.20 a share. Stock's down about 16% year to date, 10% of the float shorted, but nonetheless, investors liking that call.
Yeah.
Tim setting it up about 2%.
And I'm going to add another one to your list. This
Sure.
is for Katie. Ferguson PLC, which we were talking about a little earlier, which we all just learned about here from Heather Brilliant over at Diamond Hill. 52-week high, Katie Greifeld.
No kidding. That's not the Polish grocery store, right? That's
No, this is the HVAC supplier that's actually based overseas in London, but as she told me, they're still a U.S. company. So I don't know how that
valuations. You
works.
got to screen for the discounts.
No, we had this great guest on, and she had these stock picks, and they were all foreign companies, and then she said, well, they're not all
We learned a lot.
But
Well, that's what's great about this job. You get to learn every single day.
Talk about bringing the discussion to a halt, guys.
All right. Carol did the gainers. I'm going to do some of the decliners. I wanted to point out shares of Meta Platforms. They were all over the place today. This after executives, including Mark Zuckerberg, spoke at the company's Connect Developer Conference. Stock dropped as much as 4% earlier in the session, ended up moving as high as half a percentage point, fell 0.4% at the end of the day. The company introducing some AI features to its apps. It's going to give the company's users all over the world the ability to chat with people and machines, kind of like what you have with ChatGPT and OpenAI. Some celebrities, including Paris Hilton, Tom Brady, Snoop Dogg in there as well.
Wait, you chat with them directly, or are you chatting with what?
Yeah, they're kind of like avatars of them.
Oh, so
they're
Tom Brady just gives his voice and they create.
Well, but his voice and his face too.
Okay.
And he
Oh,
becomes
his
like a
face.
sports
Oh,
expert.
now you sold me.
Yeah.
Now you're
He's pretty
talking.
busy in retirement, I have to say, isn't he?
Well, he's getting his bag. He's like, isn't he like, what is he now? He's like a Delta pilot? Is that something?
Yeah, Delta pilot, I believe. Yeah, no, I think
Okay.
he's a team member at Delta, I think is the proper term.
He's
yeah.
the metaverse, actually.
Okay, so I'm going to continue with the other decliners. NextEra Energy NextEra Energy Inc., I should say, the worst performer in the S&P 500 on a percentage basis today, down 8.2%. Shares fell after the company struck an agreement to sell its Florida city gas utility to Chesapeake Utilities Corp. Shares also taking a hit after NextEra Energy Partners LP, which owns, operates, and acquires wind and solar, reduced its growth rate expectations for limited partner distributions. The company also cutting its full-year run rate adjusted EBITDA forecast, which hit NextEra Energy Inc. as well. And then taking a look at pot stocks today, Aurora Cannabis down 5%. Pot stocks also all over the place today. I wanted to take a look at them because the Senate Banking, Housing, and Urban Affairs Committee advancing their Safer Banking Act, which would allow banks and credit unions. Well, you're laughing because they've been doing this for years?
Yeah, they've been doing this for years.
Well, wait.
I think what gets passed first? A budget for next year or this bill?
Yeah, that's a good question. I think it's all. It's one thing for the Senate to be able to do this, but this passing the House is an entirely different story.
Yeah, absolutely. I do want to talk about real quickly about yields here because we did see, once again, real meaningful volatility in the Treasury space. The net effect of it was yields higher once again. On the short end of the curve, not by much, just about a basis point here, but the belly of the curve saw most of the action, about 8 basis points higher on the 5-year, 7 on the 10-year here, and even on the long end of the curve, we're higher by 4. And that brings me to a question that I want to pose to you guys here because there's an interesting note out by Bank of America that are kind of looking at the trajectory of yields. We talked so much about what Jamie Dimon had to say in that Times of India interview that 7% wasn't necessarily out of the realm of possibility. They're kind of given a scenario for getting to 5% and staying at 5% and what it would take. But I thought it was interesting. They talked a lot about the term premium and a lot about the fact that some of the moves that we're seeing, particularly on the long end of the curve, to them seem to suggest more, I guess, optimism about economic conditions longer term.
Well, that's the question we've been asking for months now. What is actually driving it? Is it economic optimism, maybe that recession getting priced out of the bond market, or are we adjusting to a new regime here, a higher inflation rate, a higher neutral rate? Is that what's going on at the long end of the curve, or have we moved beyond that? Is this technicals? Is this people getting flushed out? I don't know. I'd love to know, though.
Does Carol know?
Carol, help.
I'm ghosting you all right now. No, but it's interesting, our conversation with Peter Atwater, where he was like, what are we missing that's maybe on the negative side of things and more concerns? And, there's so much, it seems like, optimism, even when just the things that come at us, even if you look at the VIX, right? It hasn't spiked up high over some of the worries about a higher rate environment. And even though we've seen rates move up, it seems like there's still a fair amount of optimism out there. So are we missing something? And I don't know. So in other words, I don't know.
That's a great way to end it.
On that note,
We're here with the
Nice
answers.
I
definitive.
guess I should have just
I don't
ghosted
know.
you guys.
I don't know.
I don't know. Go. It's a new function. All right. I'm going to run. I'm going to hide. That'll do it for our cross-platform radio, TV, YouTube, and Bloomberg Originals. I guess time will tell us kind of how it all plays out. Join us again tomorrow for our cross-platform coverage. We'll see you then.
Hi-ho, it's home from work we go. Hi-ho, 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 it's home from work we go.
All right. So off to work you go unless you've been ghosted. We've been talking a lot
Do you
about
know about this music ahead of time?
I have people.
Okay. That's news to me. I mean, you're like on top of everything today, Carol. I'm very impressed.
It takes me 2 days to get there, but I get there.
Hey, by Wednesday, you've hit the ground running, and you're ready. You're ready for success.
But don't ask me to do things on Monday and Tuesday because it's a mess. All right, so let's get to it. We talked about this certainly with Katie and Romaine about being ghosted. You may have been ghosted by a friend, a romantic interest, a family member, a coworker, Tim.
Maybe.
Maybe. How about being ghosted for a job listing?
Who hasn't been ghosted or been a ghoster?
I can't tell you how many people come up to me and like, "Are you ghosting me, Jason?" Ghosted me? I'm
He's
like,
not
no, I just didn't get to my messages. All right, apparently it's a thing. Recruiting experts and job seekers maintain that some postings don't actually have jobs behind them. Sometimes a company will post a role in advance of an opening becoming available to build a pool of applicants. This is a story by Bloomberg's Matt Boyle and Molly Smith. It is a most read story on the Bloomberg today, so let's get to it.
Yeah, with us right now, I want to bring in Matt Boyle. He's Bloomberg News Senior Management and Workplace Reporter. He joins us on Zoom. Also, here is Molly Smith. She's Bloomberg News Economics Editor. She's with us in our Bloomberg Interactive Brokers studio. Molly, what gives? What is going on here?
You know, this was a crazy story to report, and
how did it come to your attention?
So I actually was talking about this with one of our economists here at Bloomberg about the JOLTS data, which we reference in the story. This is the government's measure of job openings across the
This is like one of my
economy.
favorite stats to just throw out there.
Janet
Huge.
Yellen
The
used to
Fed
love it, right?
too, the Yellen, everybody. Yeah, huge statistic that a lot of people have looked at, especially in the post-COVID economy. So this economist here at Bloomberg was asking me how many of those job postings are really active. And I was like, I have no idea. I wonder, if some of these job posting sites can measure for that. And teamed up with Matt, and we worked then with Revelio Labs, who analyzed some of these job postings online to find that a job posting today is half as likely to result in a hire as it did pre-COVID. You
know what's so funny, Carol? I get so much flack, when I talk about JOLTS on air. And
why?
People push back on it on Twitter, and they say, you know what, this isn't a good measure. Why would I move, to a different part of the country for this? You guys talk about working overnight at a gas station in one of your articles. People argue with me that it's just not a good measure of the jobs that are available out there.
All right.
I mean, I think, to be fair to, JOLTS and the people at the Bureau of Labor Statistics who we talked to, and Matt, jump in on this after me if you want. But this was, I think this was something that Matt and I were actually pretty impressed by in terms of all the screening that the Labor Department does for the postings that do make it into the JOLTS data. For me, I was honestly a bit more skeptical of what goes on the job posting websites. That I remember Indeed told us, this is in the story, that they said that these fake postings are, quote, not a prevalent issue. Yet at the same time, they've removed tens of millions of postings every month that don't meet the guidelines.
So, all right. Come on in, Matt. Come on in on this.
Yeah, I mean, we were as Molly said, we were very curious about what's behind JOLTS. So we talked to Mr. JOLTS. We talked to the guy who he was there when JOLTS was founded and started up more than 20 years ago, and he's still the supervising economist on it. So this guy knows more about JOLTS than any man alive. And he did allow for the fact that, yes, the sample size they draw from is small, although it increased recently, but it's 21,000 firms that they compile their numbers, and they're not scraping job postings. Some people think, oh, it's just a bunch of useless, online ads. No, JOLTS is not scraping, the job sites, but it is a lagging indicator. And you're right, it's a small sample size. So that's why one economist equated it to garbage recently. So there's so much frustration and so much confusion, I think, around this issue. That's why Molly and I had a lot of fun diving in.
And the other criticism that JOLTS gets a lot, as well as some other Labor Department data, is the low response rate. So this has become more of an issue post-COVID now, that for the survey data is just like really suffering, and I think this is something that definitely government agencies are looking into.
Well, I am curious, Matt, like after you guys, went out and did this, because we do often cite JOLTS and we talk about the importance of it and as an indicator of what's going on in the labor economy. We care about it because it's part of the Fed's dual mandate, in terms of employment. We want to make sure we have a good read. What was your takeaway? Do you feel like, okay, this is a good number for us to kind of talk about and discuss in terms of the strength or lack thereof of the U.S. labor market?
I mean, I think it is a number. I mean, you never want to be so overly reliant on one number. And I think we kind of lost our mind over JOLTS during the Great Resignation when we were like, oh my God, there's 2 jobs out there for every unemployed person, what is going on? So I think, it really got quite a spotlight. And then as Molly said, Powell was bringing up as a sign of the labor market tightness. So if you want to, but if you want to get a good read on the job market, don't just look at JOLTS. Spend some time on some of the subreddits that I was hunting around on where people are just telling these stories of being ghosted, and some of the people we interviewed were flying across country for a job that they thought they had landed. They thought they had it in the bag, and then the employer just disappears or goes elsewhere. I mean, and again, let's remember that ghosting goes both ways. During the Great Resignation, there were plenty of employees who were ghosting the employers. So the shoe's on the other foot, of course, right now. But I mean, when you're trying to get a read of the job market, you never want to spend too much time or too much, prevalence to one metric.
I think the big lesson for us too in this as well was that it's not that JOLTS is like absolutely flawed. It's more that like if you want to take an inference from it, it's the direction, maybe more so than the absolute level of job openings. And now that our team is preparing for what would happen in the event of the government shutdown and what we're going to do without these government data like JOLTS, we're looking at these other third-party data, like Indeed has their own job posting index, and their economist said the same thing. It's the trend is pointing in the same direction, and that's what you can infer here.
Well, and I do go to, Molly, share with us, though, some of the stories in terms of what people were finding and who were being ghosted.
Right, yeah. So the job seeker who we quoted in the story, this was crazy. This guy, Jordan, he's 29 in the Rochester area. He's worked in retail jobs for like 10 years, has plenty of experience doing anything from being a cashier, stocking shelves, not just like some kid off the street. He has done this for a long time and was telling me that he's, had applied to like maybe over 50 jobs in the course of 6 months, heard back from maybe a dozen of them. And this one that he did hear back from gave him a verbal offer, and then he never heard from them again. And he checked to see what happened with the posting. It had disappeared from the site. It came back up. He tried reaching out to them multiple times. I think he even went there in person, and there was just nothing he could do.
Wow. Hey.
But is it ghosting, or is it a case of, okay, maybe the employer decided, not interested, pulled it down, and then decided to put it back up?
Well, that's what, I think it really varies who you talk to. And I was just talking to another friend of mine who works in recruiting, and she's just as puzzled by this too, as to why ghosting is happening at the level when you already have a candidate in an interview process.
Right.
Like, sure, there are recruiters who get inundated with applications. You can't acknowledge all of them. But if you're already interviewing somebody, that just seems unacceptable.
Wow.
Hey, Matt, just in the 15 seconds that we have left here, your workplace reporter, what's going on behind the scenes here at these companies?
Well, what's going on behind the scenes is they're eviscerating their recruitment staffs. That's for one thing. I talked to one former tech recruiter who worked at Meta and Amazon, and even she's looking for work, and she's getting ghosted. So there you go.
All right. Matt Boyle, Molly Smith, thank you so much. Great story. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
All day long at Bloomberg, after the bell, we heard from Micron Technology, and it predicted a worse loss than feared in the current quarter, indicating that a slump will drag on further. Micron is the largest American memory chip maker. Stocks ended the day mixed. It was a choppy session. The Dow down 68 points today, down 0.2%. S&P up 1 point, little changed on the day. NASDAQ held on to a 29-point gain, up by 0.2%. 10-year yield 4.60%, with a 2-year at 5.13%. Spot gold down $24 the ounce to $18.76, down 1.3%. West Texas Intermediate crude keeps on going. WTI up 3.6%, 93.68 a barrel. After the bell, Lululemon Athletica agreed to a 5-year partnership with Peloton Interactive. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovic. It's been quite a year for startups in the innovation world at large. You know, we've got a few IPOs finally happening or moving forward.
Finally. Birkenstock took 260 years to go public, Carol.
Just saying, it's finally happening. You got a new craze about with a corporate and investor buy-in. We're talking so much about AI. It feels like nobody's talking about metaverse anymore. It's all about artificial intelligence.
Yeah, I mean, look what Facebook, Meta platforms did today with AI. All of this against the backdrop earlier this year of the failure of a bank so key to the startup community. We're talking, of course, about Silicon Valley Bank. An evolving rethink about crypto and how the world and the failure and perhaps the fraud of FTX and SBF could actually happen. And then, Carol, there's the continued heightened scrutiny of big tech. Yesterday, as you know, the FTC suing Amazon in a long-anticipated antitrust case, accusing the company of monopolizing online marketplace services by degrading quality for shoppers and overcharging sellers.
A lot going on, and a great voice to really just kind of give us the reset in the background when it comes to the entrepreneurial and innovation space. Steve Case is chairman and CEO at his investment firm Revolution, co-founder, of course, of AOL, which at its peak, nearly half of internet users in the U.S. used AOL. So really just a game changer, and he's back with us on Zoom from Washington, D.C. Steve, it is great to have you back here with Tim and myself on Bloomberg Business Week. You know, it's been a year since you published Rise of the Rest, How Entrepreneurs in Surprising Places Are Building the New American Dream. It's now out in paperback. How is the entrepreneurial spirit and the American dream doing, in your view, in the pursuit of it?
Well, I think entrepreneurship continues to be alive and well, and the message of the Rise of the Rest book is it just isn't alive and well just in places like Silicon Valley. It's places all around the country that are developing a strong startup ecosystems, and that's helpful because entrepreneurs who historically would have to feel like they had to leave where they were from to go to the coast to be part of the innovation economy now can stay and build and scale there and create jobs there. So it's been great to see the momentum over the last decade since we started Rise of the Rest. The pandemic has certainly been an accelerant, almost a tipping point in terms of more people deciding to move other places. So we've seen a dispersion of talent and a dispersion of capital and a lot of great ideas that are really kind of reimagining healthcare and food and agriculture and financial services and transportation and education. Some of the most important aspects of our lives and some of the biggest industries are really up for grabs in this next phase.
Rise of the Rest is the name of the book. It's the name of the seed fund as well, Steve. What about rise of the rates that we've seen over this year? To what extent is that hurting the startups that you talk to and you interact with?
Well, certainly when rates are higher, you know, there's a little bit of a pullback in terms of the stock market valuations, as we've seen, and therefore a pullback in terms of particularly the late stage private market valuations, the pre-IPO valuations. So we've seen that dynamic over the last 18 months or so, which frankly I think is healthy and not all that unexpected. A couple of years ago, things were getting a little frothy in that later stage, and so we're seeing a correction with the growth stage of the market. On the earlier seed side, it's not quite the same impact, and particularly in these Rise of the Rest cities, the valuations of the seed investments we've done with our Rise of the Rest fund, and so far we've done over 200 investments in 100 different cities. Valuations tend to be about half of what the valuations are for comparable companies at the seed stage in places like Silicon Silicon Valley. It's a classic supply and demand. So much capital is focused on venture capital focused on Silicon Valley, not enough on other parts of the country. So that dynamic still creates a great opportunity for investors who are willing to do the extra work to identify promising entrepreneurs tackling big industries in dozens of cities all around the country.
Well, and that's a really good point that you talk about all of the innovation that's going on in other cities beyond Silicon Valley. Having said that, the collapse of Silicon Valley Bank and the fallout, what did you see as a result of that in terms of the work that you're doing and the investments that you're doing? Or none, maybe?
It was a problem. No question. Even though it's called Silicon Valley Bank or SVB, they actually banked startups all over the country, not just in Silicon Valley. And about half of the startups and about half of the venture firms in America were banked by SVB. So it's been very unhelpful. A number of firms are trying to fill the void and offer different products and services to both the venture funds and to the entrepreneurs, but it's certainly been a negative this year.
Hey, one thing we really wanted to ask you and was about what's going on in terms of regulation. We've been talking a lot about the FTC suit against Amazon, right? Antitrust case. We've all been kind of waiting for this. And the accusations are that Amazon is monopolizing the online marketplace services by degrading quality for shoppers and overcharging sellers. How do you think about this?
Well, I haven't read the actual case. Obviously, as you said, it's been expected for some time. The FTC has gotten more aggressive on big tech.
Is that good? Is that good that they've gotten more aggressive?
I think more scrutiny of big tech, I think, is healthy. My focus is around the new companies, the entrepreneurs, the insurgents that want to take on some of the bigger incumbents and making sure that there's an environment that allows innovation to flourish, entrepreneurs to be successful, including in areas of e-commerce, or they have a similar case with Google on some issues related to search. So I think that scrutiny is appropriate. Exactly what happens, each court case obviously needs to kind of we'll have to see how it plays out. But I think it is important that we make sure we're erring on the side as a nation of making sure entrepreneurship can flourish everywhere, and big tech doesn't just get bigger, including, by the way, with AI. One of the big debates here in Washington around AI as it gets more attention is it going to end up being a few big companies getting even bigger, or is it going to be a broader, more dispersed innovation ecosystem, a little bit more on the open source side? And so we'll see how that plays out over the coming years. But the internet's now so important. Technology is so important. Every industry really is now tech-enabled. Every company really is in some ways a tech company. It's not at all surprising that there's more antitrust scrutiny.
Did it ever feel like to you that AOL, in your days of founding and running AOL, was so big that it could have faced more antitrust scrutiny?
No, we actually did, and some of the News Corp and others at one point, filed suit saying AOL had too much control of the internet, and even when we merged with Time Warner, Microsoft, AT&T, others were trying to block the deal with that argument. And so, in that particular case, obviously, I hate to say it, but for a whole host of reasons, AOL fell by the wayside. New entrants, including Google and Facebook and others, kind of took over, and it's because those news companies were able to start. They were able to raise the venture capital. There were not barriers to entry to allow them to start. So that's, to me, the philosophy we need going forward. Celebrate the successes we have in our country, including some of these great companies, Amazon and Google and so many others. But how do we make sure we're also creating environments so more of those companies can be the big companies of tomorrow, not just on the coast, not just in Silicon Valley, but all over the country, which obviously is why I wrote the book, Rise of the Rest.
So how do we do that, though? I mean, we spoke to Diana Henriquez last week, who compared the power companies of the 1920s and 1930s and the regulation of the power companies to the tech companies, the huge tech giants today. And she says government needs to get involved with them. What does the government need to do in order to ensure that the rest can rise?
Well, I'm co-chairing the National Advisory Council on Innovation and Entrepreneurship here in Washington. And we're working on a national entrepreneurship strategy, which we'll be releasing later this year. And there's a number of facets to it. Some relate to talent, including immigration policy. Some relate to access to capital, including some of the work around Rise of the Rest. Some of it relates to making sure there's continued investment in regional hubs. Congress passed the CHIPS and Science Act a couple years ago and authorized $10 billion for regional hubs but it's only so far appropriated $500 million of it. Some of it's making sure America continues to invest in the R&D, the technologies of the future to create the industries of the future. So there's many facets to it, but the overarching theme, I think, is how do you make sure this next generation of entrepreneurs can start and scale and do it anywhere in the country, not just a few big companies being able to innovate or only people in a few places like Silicon Valley. So it's trying to create a more inclusive innovation economy has to be a key part of the answer.
Steve, we're often so critical of other countries and their supportive industries. I'm thinking about China specifically, but we are increasingly seeing the U.S., whether it's in the semiconductor space, whether it's in the EV or the energy transition support industries here in the United States. Should we, especially when it comes to some of the more newer, innovative areas?
Yes, and again, there's sort of this long debate about industrial policy, long debate about how much of a role should government play. But the reality is the internet wouldn't exist if the government hadn't funded, DARPA, a research agency, a half a century ago, and then opened it up, commercialized access to the internet, and broken up the phone companies, so the cost of communications, came down. There are a number of decisions that really unleashed the internet. So having that government role, I think, is important. That innovators need to respect the role of policymakers. And I actually think in the next decade, the two mega themes are going to be place and policy. That we're focused here at Revolution around place, particularly Rise the Rest. We think a lot of the big companies of tomorrow will have a policy aspect to them because of the nature of the industries up for grabs, and because Congress has passed legislation, about $3 trillion of legislation, the CHIPS and Science Act, the Inflation Reduction Act, the bipartisan infrastructure bill, that's going to really invest in these industries in a big way and create opportunities for investors, as well as ensuring that America has the right infrastructure, has the right technologies to continue to be the most innovative entrepreneurial nation in the world.
Gotta say, Steve, every time you're on, you just leave us wanting more. So come back soon, and good luck with the paperback version, I should say, of Rise of the Rest.
Thank you, Carol. Thank you.
Okay, be well. How entrepreneurs in surprising places are building the new American dream. Of course, Steve Case.
Well, let's get a check on the latest world and national news. We're going to stay in D.C. Go over to Nancy Lyons. She's at the Bloomberg 99.1 newsroom. Hey, Nance.
Thanks, Tim. The second Republican presidential debate is set for tonight at the Ronald Reagan Presidential Library in Simi Valley, California. 7 Republicans have qualified for this one, but the GOP frontrunner Donald Trump will not be there. Bloomberg's Anne-Marie Hordern says watch, though, for ramped-up rhetoric during this debate.
A lot of focus will be on DeSantis, who I think he had about the middle of the road in terms of timing he was able to grasp on the last Republican debate, and a lot of people weren't going to come after him. Tim Scott is going to try to break out. Recently, you have seen some of these Republican candidates start to attack the frontrunner, former President Donald Trump.
Bloomberg's Anne-Marie Hordern. Trump will be in Michigan tonight working to win over blue-collar workers in the midst of the auto workers' strike. His trip comes a day after President Biden became the first sitting president to walk a picket line. The union could expand the strike tomorrow if no progress is made. Not guilty were the only words heard from New Jersey Senator Bob Menendez during his arraignment today on bribery charges. He left the New York City courthouse without speaking to the press. Federal prosecutors accused the Democrat and his wife of accepting hundreds of thousands of dollars in cash, gold bars, and gifts in exchange for using his influence to help businessmen and the government of Egypt. U.S. astronaut Frank Rubio has successfully landed in Kazakhstan after breaking the record for the longest continuous spaceflight by an American. He spent 371 days in space. This is NASA's Rob Navius.
Touchdown confirmed at 6:17 a.m. Central Time. Rubio's record ride comes to an end.
Rubio's stay was extended on the space station after the original spacecraft suffered a leak, forcing them to use a replacement to bring him home. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Jefferies, after the bell, reported net revenue for the third quarter that missed the average analyst estimate. Micron Technology is predicting a worse loss than feared in the current quarter, indicating that a slump will drag on further. Turned out to be a mixed day after all, a choppy session. We had the Dow lower by 68 points, down 0.2%. S&P 500 index, little changed on the day, up by 1 point, while NASDAQ was higher by 29, a gain of 0.2%. 10-year yield 4.60% with a 2-year at 5.13%. Gold down $24 the ounce to $18.76, a drop there of 1.3%. West Texas Intermediate crude up 3.7%, 93.73 for a barrel of WTI. Well, as for the market outlook, Stephanie Pierce is the CEO of Cash Investment Strategies at BNY Mellon, and she was a guest right here on Bloomberg Business Week.
We actually think cash is a pretty good place to be right now. We're certainly in this, I would call it, higher for longer environment than people thought a few months ago. There's probably one more hike ahead of us. And at some point here, we want to start positioning and hedging portfolios for lower rates, but we're not quite there yet.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Again, after ours, Micron Technology among the companies out with earnings. The stock right now is lower by 3.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live in our Bloomberg Interactive Broker Studio, streaming on YouTube and, of course, on Bloomberg Originals. So a lot going on today, and we had Meta Platforms. You talked about this earlier, right, in your decliners.
Yeah, the company introducing its latest lineup of head-worn devices. It's taken some fresh claim to the virtual and augmented reality industry just ahead of Apple pushing into market. I think the bigger news, though, is what they're doing with the AI chatbots and, hiring celebrities to sort of be the avatars and licensing their image and likeness.
It's kind of brilliant.
Yeah, it is kind of brilliant.
It's fascinating.
How much do you think it costs to, get Tom Brady to be the face
or
of
Snoop?
Snoop for
I don't
WhatsApp?
know. I'm thinking it costs a lot of money.
It's not a bad thing to be a celebrity in this day and age.
No, exactly. So let's see what our guest has to say about this. Paul Su is with us. He's founder and CEO at Decasonic. It's a firm that invests in and advises around NFTs, cryptocurrencies, blockchain infrastructure, the metaverse, decentralized finance, and more. So it's really kind of on it when it comes to, I feel like, innovation in a big way. In other words, the world of what's become known to many as Web3.
Yeah, Paul joins us on Zoom in Chicago this afternoon. Paul, give us your reaction to Facebook, or I keep calling it Facebook, Carol. Can I still call
stop
it
that. No.
Meta Platforms today.
Tim, Carol, thanks for having me again. Very excited to be here and talk about Meta. Certainly, their announcements today points to what early stage VCs are investing in, this intersection of technologies. It's where two or more disruptive technologies converge. In this case, AI and mixed reality, chatbots from Tom Brady with their Quest Pro 3 launch that's upcoming. It's generating a lot of consumer excitement. We see this in history on how Apple also innovated on smartphones, intersecting cellular voice with consumer mobile data.
So, I keep trying to figure out, I get it to some extent, but I do try to figure out, how does this really move the needle akin to the internet, which really did move the needle in how we do so much in our world. It's kind of amazing, right, how ubiquitous it is to kind of almost everything we do, whether it's at work, at play, have you. Is that how we need to be thinking about the impact of chatbots and generative AI?
Ubiquity in the internet didn't happen overnight. I think it took about 15, 20 years to really go mainstream. And we're seeing Facebook and Meta also make these long-term investments on an immersive experience. Apple has their Vision Pro launch upcoming as well. It's much more expensive than Meta. And so Meta believes that with the deflation in device costs, this will accelerate mainstream adoption.
One thing that I wonder, though, and we were just talking to Steve Case, founder of AOL, who knows a thing or two about starting companies and building them, all about this, because he's got the paperback out of his new book that he wrote last year. Is the environment conducive to startups actually winning in this day and age? I mean, look at this. You have, companies out there that are doing really cool stuff in Web3 and AI and the metaverse, but Facebook is doing its developers conference today and sucking a lot of the air out of the room.
The only data point I could share is we're seeing success in our portfolio companies that are winning. They are taking this approach of the intersection of these technologies. It's not so obvious for a large company to be pursuing blockchain and AI convergence, metaverse and Web3 intersection, metaverse and blockchain intersection, mobile and Web3 intersection. But we are seeing pockets as an early stage investor, that success and trajectory upwards of $100 million in revenues. And that might not move the dial for a multi-trillion-dollar company, but it's certainly very interesting for early stage VCs.
Where are you seeing, or where are you investing the most in? Is it NFTs? Is it crypto, generally speaking, blockchain? Is it the metaverse? Is it decentralized finance? Give us a little bit more specificity in terms of your interest and really the investment interest right now, where you want to commit.
Decasonic is a fund focused on the mainstream adoption of blockchain, Web3, and metaverse. A lot of those use cases are non-financial use cases, and it does bring in global brands with their global communities around digital collectibles. We are seeing a lot of customer heat in this area, a lot of interest, and a lot of revenues starting to scale in these non-financial use cases.
Like what?
For example, in our portfolio company, we have Spaceport. They are working at the intersection of metaverse and blockchain. Spaceport is accelerating deals with creators in blockchain verified royalties. Very timely, as the writer's strike focuses on AI and creation. Mobile and Web3 is another intersection. Paragon provides a mobile-first way to experience digital collectibles like the Starbucks Odyssey program. This is very important as Gen Z prefers mobile access to their crypto assets. Yeah, and lastly, we have an investment in Mirari. They have a tokenized network to deliver mixed reality experiences. This is the intersection of metaverse and Web3. Very important as the VR goggles require high fidelity experiences. So they will work with Disney and Vision Pro and Meta around these goggles.
I got to tell you, this stuff still seems so niche to me. It's not like we're all running around wearing these goggles. And when does it become mainstream?
Today, a lot of goggles are gaming focused. Meta also announced smart sunglasses today, and that might have a higher adoption rate initially. Crypto today is roughly 52 million Americans. A lot of them, 75% of them make less than 100K a year.
Right.
This is data from Coinbase.
I do want to bring up an article that our own Alex Branco wrote earlier today. Snap is set to shutter its business-focused AR unit that was just launched this year. So what, Facebook and / Meta Platforms is doing, Snap is saying, okay, we're no longer doing that.
Augmented reality.
Yeah.
I think Snap has a great camera experience, and they've certainly scaled AI chatbots that has influenced Facebook to get into this area.
Well, I'm sorry, Tim, go ahead.
I was just going to say, this is the Ares unit, short for Augmented Reality for Enterprise Services. Yep. It was just announced back in March.
So I wonder too, Paul, the news from Meta today, we just got about 25 seconds left here. Does that somehow make you say, oh, wait, maybe we should be also doing this because of what Meta said today, just very quickly?
Very quickly, we will assess the news and look at some of the gaming companies that might be optimized for the Quest Pro 3. This was Mark's focus of his demos today, and there will be new gameplay focused on Xbox and Meta integration.
All right, well, good to check in with you on a day where we've had some news, and you certainly have some overview insight into all of it. Paul, of course, founder and CEO at Decasonic, joining us on Zoom in Chicago. Carol Massar, Tim Stenovic, and this is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Micron Technology is predicting a steeper loss than anticipated in the current quarter, indicating that an industry slump is still weighing on the largest American maker of memory chips. Micron after hours down 3.9%. Jeffrey shares are slipping after hours, down now by 3.5% after the financial services company reported net revenue for the third quarter that missed the average analyst estimate. Snap, as we were just discussing, is closing a division focused on making augmented reality services for businesses. And with more on that story, here's Bloomberg's Leslie Lotto.
Charlie, the Santa Monica-based company is pulling the plug on the latest attempt to diversify its business. The Ares unit, short for Augmented Reality for Enterprise Services, was just announced in March. The idea was to let retailers adapt Snap's AR technology for their own websites. But according to a memo from CEO Evan Spiegel, seen by Bloomberg News, the company ultimately realized that the cost and complexity of the endeavor was too great. Ares was one of Snap's biggest new undertakings since the social media company was restructured last year, and its quick demise shows the challenges of adapting to a world roiled by the artificial intelligence boom. Charlie?
And that's Leslie Lotto reporting. Snap shares did gain today on a down day for the Dow Jones Industrial Average, an up day for NASDAQ. Snap shares up by 1.8%. Those are some of the top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master, along with Tim Stanovic, live here in our Bloomberg Interactive Broker Studios.
Yeah, we are live.
What do you have for me?
Well, I want to go to Washington, D.C. I want to go check on the latest world or national news. We got Nancy Lyons in the Bloomberg 99.1 studio. Hey, Nance.
I'm here. Thanks, Tim. The U.S. is on track for an October 1st government shutdown despite incremental progress in the House and Senate on rival spending bills. The Senate has come up with a bipartisan bill to delay a shutdown until mid-November, but it is not likely to pass the House. Speaker Kevin McCarthy, meanwhile, says his chamber is moving on some appropriations bills, which will not likely be approved by the Senate. Bloomberg's Billy House says McCarthy is the one that's really under extreme pressure right now.
He tries to project a kind of a rosy demeanor that he solved all the other problems, default problem with before, but this one seems like a new level of intensity, and you can tell his anxiousness at times is starting to wear.
Bloomberg's congressional reporter Billy House. New Jersey Senator Bob Menendez is maintaining his innocence and pleaded not guilty today at his arraignment on bribery charges. Pressure, though, continues to build on Capitol Hill for him to step down.
The Senate's number 2 Democrat, Dick Durbin, is now calling on Menendez to resign. In a post on X, formerly Twitter, the Illinois senator said leaders in New Jersey have made clear Menendez can no longer serve. This is a shift for Durbin. Over the weekend, he told CNN's State of the Union Menendez should be presumed innocent and voters should decide his fate. Senate Democratic leader Chuck Schumer has said little beyond a statement last week that Menendez deserves due process in the courts. In Washington, I'm Nathan Hager, Bloomberg Radio.
U.S. officials say Private Travis King is in American custody and heading back to the U.S. after months of detainment in North Korea. He was the soldier who ran into North Korea during a tour of the DMZ. Here's the State Department's Matthew Miller.
Obviously, we're pleased to have secured his return. We're very thankful for the government of Sweden for their work as the protecting power that they did to help facilitate his transfer back to the United States.
King crossed the border into North Korea after being jailed for 2 months in South Korea. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Tim and Carol.
All right, Nance, thank you so much. 2 stories we want to get to. They are among the most read. This is the most read in the past 60 minutes, and this has to do with, I think Charlie mentioned it, Lululemon agreeing to a 5-year partnership with Peloton that involves tapping its online workouts and teaming up on apparel. Tapping?
Yeah, tapping its online workouts.
Yeah, I guess so. Online workouts and teaming up on apparel, a deal that helps.
Maybe it's like a tap back reference.
I guess tapping like.
You know, I'm cycling right now.
I'm like
Don't you
tapping?
back when you're in Soul Cycle?
I don't know. Right now, my Peloton is like, we're hanging things.
Hanging clothes on it? Are you still paying for it every month?
Ka-ching, ka-ching.
Yeah, well,
yeah, as my husband likes to remind me.
Okay.
Use it or lose it, baby.
So as part of this accord, which was announced this afternoon, Lululemon will make co-branded clothing